Welcome to the 2021 Flywheel Investment Conference presented by Moss Adams, Ogden Murphy Wallace, Confluence Health, and Microsoft. The Flywheel Conference celebrates the drive, passion, and spirit of Washington entrepreneurs while cultivating momentum for those who are just starting their journey. My name is Jenny Rojan-Asatian, and I'm the Executive Director of NCW Tech Alliance. Through partnership with presenting sponsors, along with the City of Wenatchee and Chelan Douglas Regional Port Authority, our nonprofit is so excited to kick off today's conference. You are going to watch as 6 founders compete live on stage for over $200,000 in investments, a $50,000 relocation offer, and a $5,000 cash prize. Plus, we have some incredible speakers who have traveled from across the Pacific Northwest to share their expertise and insights. This is our second year navigating through the pandemic. In 2020, we went all virtual. This year, we're hybrid. We have a small in-person audience watching in downtown Wenatchee. They are joined by you, a worldwide audience tuning in from the comfort of home. Be sure to go to our website, flywheelconference.com, so you can vote for your favorite company. You can read our detailed agenda and check out our speaker biographies. We've also got some fun questions and interactive polls lined up over the next 3 hours. You can link out from our Flywheel website or visit menti.com on any smart device and input the code below. People think of North Central Washington as an outdoor haven. From playing on the Columbia River to hiking the North Cascades to biking in the foothills, we're pretty lucky. The combination of 4 distinct seasons and vicinity to large cities makes it truly a great place to live, work, and play. As our world starts the recovery process from the pandemic and traveling increases, I invite you to visit our home. Join as our guest for the weekend, and you might find everything you need here to build, support, or run your business. Next, Rob will share more about the competition. But first, here's a couple of key points I'd really like to send home. 1, the winner of the Flywheel Conference is not predetermined. Immediately following today's pitches, our investors will deliberate, and then we'll be back online just before 5 p.m. to announce the winner. We'll be streaming on our social media channels under NCW Tech Alliance, so be sure to like and follow us there. 2, you, the audience, get to vote for your favorite company to win $5,000. I mean, who doesn't love a cash prize? 3, I hope you have fun, learn something new, and walk away inspired. I want to thank you so much for joining us today. Now over to Rob.
Hello, I'm Rob Tidd with the Flywheel Angel Network, and I have the pleasure of serving as this year's fund manager along with my wife, Belinda. Every year, the Flywheel Angel Network creates an investment fund as part of the Flywheel competition. The only competition requirement is that the company is based in Washington State. Since 2018, we now have awarded over $415,000 to Washington entrepreneurs. This year, over 50 companies applied for the chance to receive up to $200,000 from our investment network. Today's conference, therefore, has more at stake than ever before. Our investors have narrowed down the field to the top 6 companies that you'll watch today. Each business is at a different stage of development and out to solve a different problem with their innovative ideas. I encourage you to learn more about our top 6 companies and all of this year's applicants in our event program online. For today's format, each founder has been given 8 minutes to give their best company pitch. Immediately following that pitch, we have investors on stage serving as our sharks who will do rapid-fire follow-up questions with each founder. Our on-stage investors are a mix of investors from our network as well as guests. In between these exciting company pitches, we also curated 2 great panels who will be led by Dave Parker and Max Martina. Now that Jenny and I have set the stage, it's my honor to introduce the first company competing this year, PetHub Inc. from Wenatchee, Washington. PetHub is a data platform that puts your pet at the center for all aspects of their life from the time they've joined your family. Presenting on behalf of their company is CEO Tom Arnold and COO Lorian Clemens. Investors on stage for follow-up questions for our first two companies will be Tim Jenkins and Dave Parker. Please join me in welcoming both PetHub Inc. and our investors to the Flywheel stage.
Thank you, everybody. Hi, my name is Tom Arnold. I'm the founder and CEO of PetHub, and I'm joined today by my co-founder and Chief Operating Officer, Lorian Clemens.
Hello, everyone.
As Rob mentioned, PetHub is a data platform that puts your pet at the center for all aspects of their life from the day they join your family. Our mission is to make it easy for you to find and share your pet's data safely.
Pet parents have to slice and dice across multiple apps, products, and services to find the full picture of what they need for their pet. Grooming, socialization, pet sitting, vet care, training, feeding, enrichment, and what the heck do you do if your pet gets lost? Especially if you are a new pet parent, all of this can be confusing and overwhelming.
The solution is PetHub. As we mentioned, it's a data platform that has all this information about your pet that you've put on the website yourself, and anybody that you've hired to help with raising your pet has put onto the site, and any apps or websites that you use have integrated to add more data to the website.
Our goal is to be the database of record in the United States, and here's how it works. PetHub is a rich data platform that houses all of an animal's information in a free online profile, unlimited emergency contacts, medical records, and a wide range of other data points.
And the mechanism that compels pet owners to put that information on our website are fully customizable ID tags that link to a pet's online profile. These are typically in the form of a rabies tag or a license tag.
So we have three buckets of services that we like to consider here at PetHub. First is Protect. This links the data to a suite of lost pet recovery tools. Next is Share. This is all about connections of data through web API and integrations. And finally, Nurture. That's curated, personalized content that provides valuable pet parenting information from trusted industry resources. Now we're going to dig a little bit deeper into each part of the model.
Right, so as Lori mentioned, the Protect piece is the physical ID tag that links to emergency information about your pet on our website. That's what helps get pets home quickly and safely. We're currently in over 600 communities in the U.S. with 700,000 pets on the website utilizing our services today. What's the next part?
That's all good. I'll go
utilizing our services today. So municipalities, shelters, and veterinarians are encouraging people to join our website. So when people do join our website, that gives them peace of mind, and because it's keeping them from entering shelters, it's saving shelters thousands of dollars per year.
Now, Share is all about data sharing, and it's basically largely through our web API. That's a service where third-party mobile apps and websites can plug into our data platform. But for pet parents, what this means is a safe and simple way to share information with providers and services like veterinarians, dog walking apps, groomers, insurance companies, you name it. They can simply share their pet's profile with these trusted partners, and then the partners can share updates and medical records and all sorts of things back to the PetHub profile.
And the Nurture piece is all about curated content. So imagine you have your profile on there and your pet's profile, and now you're getting information about our trusted partners. And our trusted partners have such information as veterinarians in your area, nutrition based on the type of your pet, dog walking services, things like that. With 700 pets joining our site daily currently and growing quickly, this puts us in a great position to provide that kind of information to all of these pet owners.
Now, the pet industry has seen significant growth in recent years, but there's still no one player that has a holistic view of an entire pet's life. This has created silos of data that frustrate pet parents, and it's the opportunity that PetHub is addressing.
And what's really cool about, as far as competition goes, our tags are a required license or rabies tag that must go on your pet. So we have veterinarians and municipalities who are actually handing these tags out for us. As far as barrier to entry, one, we're out in the market fast and far ahead of anybody else. Two, they will not work with businesses that are less than 5 years old. 3, we actually have filed multiple patents on our technology, and so we're in a uniquely defensible position.
Now, in the last 3 years, we've grown from 90,000 to over 700,000 pets in the U.S. And last year's revenue was $1.6 million.
And while we're really excited about the traction that we've had, we've actually dug in deeper to understand what exactly the value is here. And as we've done this, we've realized we've not even scratched the surface. So far, we've captured 15% of the pet licensing space, and we're growing that this year. We're also introducing an entirely new rabies tag channel starting next month, as a matter of fact. So as we're trying to figure out the value that this is to PetHub, we know that we're making $40 per premium pet per year on our website. We're estimating that for the share piece that we're building, that's a $20 per pet value, and nurture is a $50 per pet value. All that in, that brings us to about almost a $7 billion value for PetHub. Now, obviously that assumes that we have 100% market penetration and 100% attach rate to all of our services, but we have a very clear line of sight to hundreds of millions of dollars in revenue.
So let's talk a little bit more about that monetization piece. As Tom mentioned, Protect is all about subscription recurring revenue. Now, we offer this in a freemium model, so basic but valuable services are offered for free on the website. But for paying customers, they get a whole bunch of other benefits, including an extended lost pet recovery suite. Share, that's the data integration driven largely by the forthcoming web API, will be monetized in multiple ways. And Nurture is all about advertising revenue for curated content. You see, the leads that we can produce for our trusted partners are highly valuable. For example, pet food subscription companies will pay PetHub $50 or more for every customer that they get from us. And most insurance companies pay at least $25 per landed lead.
So obviously, we're very excited about the share and nurture models, and they're building off of our solid Protect base that we've already built. So as we continue to grow our Protect base through the rabies and licensing channels, and as we continue to mature the share and nurture pieces, we have a clear path to almost $39 million by 2025.
We've built an extraordinary team here at PetHub. Tom is a successful founder of several tech startups.
And Lauren has won many awards over the past few years in the pet space.
Morgan Woodward joined us with over 15 years of animal welfare and government experience. And Sherry Hagopian, our general counsel, has recently joined us full-time as our director of customer services. In fact, our entire team is passionate about pets and the value that we bring for them. And we are really also passionate about the value that we bring to the communities that we serve.
Yeah, and we've been blessed to have such an incredible group of advisors as well. Kristen Levine and Susan Cosby Jennings are really well known and respected in the pet space. Walter Thorne and Matt Landrum have a myriad of experience in business development and finance.
We're very proud about the company that we've built that not only drives revenue, but also brings value. But more importantly, we help reunite families and save lives. To date, we've helped over 25,000 pets reunite with their families. And with your help, we'll have even more happy tales to tell. Thank you so much for letting us share PetHub's story with you.
Thank you, Tom and Lorian. That was fantastic. And the audience can't see, but you finished at exactly 0 seconds left of the clock. So that was pretty impressive. Yeah.
That was all my bobble.
I would welcome you to the Wenatchee Valley, but you're from the Wenatchee Valley.
Yes, we are. Yes, we are.
You're dated. So the rabies tags are obviously a key component of getting to be the database of record, because every dog has to have a rabies tag early in their life. But that's a different. You have to penetrate a different market. You have to go into vet offices. How are you doing that?
Go ahead.
So it's funny you should ask that. We're actually launching next month at BMX. It's the largest trade show for veterinarians in pretty much the world. And we're launching in June with that program. Now, we actually already have several municipal clients in Nashville, Winnebago County in Illinois, and we just launched Memphis, Shelby County as well, that use our tags as a rabies tag. And this is sort of what we're using as the jump for that. But what we're looking at is the opportunity to offer this high-value 21st century tag to replace those stamp metal ID tags that have been around since the Civil War. And in our research that we've done so far with veterinarian clinics, they're really excited about the value this brings. And even more exciting than that is it allows them to have more value for their business. It is a walking billboard for them. They're able to have their logo on it, unlike a stamp metal ID tag that doesn't allow that. And we are also able to take some of the pressure off of them, because no longer will the people be calling the front desk of a veterinarian during business hours to help this lost pet get home. We're going to handle the lost pet recovery services. So for veterinarians, that's a huge value for very little more than they're already paying for tags.
Can you tell she's excited about this?
I'm stoked.
So 1.6 to 39 million is a big growth curve. What are your critical hires over the next 18 months?
Hires?
Yeah.
How we're going to use the money?
Yeah.
Right. Yeah, we actually sat down and we built out a model based on this fundraising that we're doing. And so part of it is actually development, adding in software developers to the team, so right around 3. A couple of salespeople and a couple tech support people. But we have engaged at very specific tiers based on where we are in our fundraising, so we don't go too fast and get too far out over our skis for our Mission Ridge folks.
Got it.
So how are you, you mentioned the ability to monetize the data that you've collected. How are you doing that today? And are you combining your data, your primary source data, with other databases to get a fuller picture of pet parents and pets?
Right. We're being super careful as far as, while the data you say that it's intellectual property that we own, we always remind our users it's their data, that we're basically caretaking for them. So we're super careful about sharing it. We won't share it unless they allow us to share it. As far as how we're sharing it, we will pull data in from other sources, but we're not currently sending it out anywhere other than we have a couple of shelter companies that we work with. So when somebody actually registers a tag, we'll send the updated data off to the shelters so that they're being kept in touch.
Right. Well, and I would also say, too, that so that's part of the forthcoming web API. That's going to be a large part of that monetization piece. And there's a lot of different avenues as those that do data integration can do. But there's certain things like for every time a mobile app, for example, needs to touch our database to get information, there'll be fractional pennies that we charge. But they're to be touching that information thousands and thousands of times. So that really ramps up quickly. But then there's also the biggest part of it is that nurture piece, where we're able to provide that curated data, and with not only with data that the pet parents are giving us, but then data that we get back from those apps that are integrating with us, we'll be able to build basically your personalized roadmap for how to raise your pet and link you with the providers and services that you need. And all of that generates a lot of different revenue options.
If you've ever seen a service out there called Baby Center, where you actually put in the age of your child, it'll actually start delivering you information weekly as newsletters and things like that. And it'll show you, oh, your child's this age. Here's some toys they should be playing with at this point. Here's some nutritional things they should be doing right now. Here's some classes they should be taking right now. Those kinds of things, except repurposed for the pet space. And when you're doing all that, those are advertisements showing all those different products. And so it's actually a model we don't have to figure out. We went and solved the hardest part first, was compelling people to want to put their data and their pets' data on our website. And the other piece of getting advertisers wanting to reach our audience, that's the easy part that people have been doing for years.
So there's a lot of different revenue models that you've outlined in it. So I guess one of the things is keeping a focus on launch versus scale. Because at scale, you can do all these things. You have money, you have people. So the question is, how do you prioritize the revenue models in the meantime? Because some of them could be, if you're too early, it could be a distraction.
Right.
So how do you think about queuing those revenue models, and what are the early indications that you should be doing that?
Right, we're looking at the low-hanging fruit, the obvious, easiest stuff first. So, for example, the display ads and things like that. We also are integrated with a company called Partnerize as far as being able to
it's affiliate marketing type
doing
of thing.
affiliate. So a lot of it is the easy money first, without doing a lot of adding a lot of people and adding a lot of developer resources. And then the other piece is. I want to make sure I understand your question.
Yeah, and I want to make sure, too, I think what you're asking, too, is like what bites of the apple are we taking first from share and nurture to tackle those? So, for example, we have lined up about a half dozen pilot programs that we're going to be doing with partners that are ready to do the data integration as we launch this web API. And so they're in the pet wellness space, the health space, in the insurance space, telemedicine space, where they're ready to go. And those are things right now that are booming in the industry, so they really make sense. And people are looking for those resources from us. In fact, we get people all the time writing into our customer care saying, saying, hey, I just got this, and where am I supposed to go for a new veterinarian? I had to have a brand new pet. So that we know is as Tom says, it's low-hanging fruit that's right there. We have people already asking us those questions. Right. So that's what we're tackling.
We also have 40 partners. We just came out of a beta a couple months ago where we had 40 partners on what we call our Perks program. And so they have been getting exposure and giving us feedback and working with us. And now we're at the part where we're starting to charge them. And they've said it's gone so well that they're only too happy to pay that price. And so they've been our model for all of that. And we can do that all day long without having to add any more people to the team because it's really easy to make it self-serve where a company can add in that information themselves.
Yeah, great use of the API economy from that perspective and using existing resources. Again, my question was really that at launch you're under limited resources, and at scale you can do everything, right? So knowing how you're going to stage that is kind of the queuing question that I was asking. So thanks for answering that.
Yeah, absolutely.
So presumably there's some big players in the pet space. I mean, PetSmart, Chewy these days, and presumably they have a data strategy. What's different about what you're doing and versus what the big folks are presumably doing?
Well, I think a lot of these guys have been figuring out how do we get people to want to put information on the site. That was just the biggest, most difficult piece to figure out first. And that was the piece that we were figuring out with getting the ID tags and actually solving a real problem. Because it used to be that 5% of cats that go missing and 20% of dogs that go missing wouldn't make it home again. And with our tags, we're actually getting pets home in 96% of pets are home in less than 24 hours. So we're making a huge difference in solving a real problem and making it where people say, oh, you want this data about me and my pet? Of course I want to give that to you. So we have really deep, deep data that these other businesses don't because they're the big guys and yes, you can have my address, my email address, and my phone number, but you can't have much more.
Great. Well, hey, we are out of time, so thank you so much.
Thank you so much. Appreciate it. Thank you, everyone.
Thank you.
Hello, everyone. My name is Lisa Karstetter, and I'm with Microsoft's TechSpark program. Since 2017, Microsoft TechSpark has been dedicated to fostering greater economic opportunity and job creation through partnerships with rural communities. We work closely with local partners on a variety of programs to help propel economic growth through internet connectivity, digital skills development, career skills development, and digital transformation. Microsoft TechSpark is also committed to empowering nonprofits and supporting NCW Tech Alliance. The Flywheel Conference has been important to us and supports our mission. I invite you to join us in our efforts by reaching out to a nonprofit near you that is working to drive economic development. I'm honored to introduce Fuchsia, a finalist from Kirkland, Washington. Fuchsia makes beautifully handcrafted artisan shoes that are comfortable and sustainable while changing the lives of marginalized communities in South Asia. Please welcome Afshin Abbas, CEO and co-founder of Fuchsia.
Good afternoon, everyone. My name is Afshin, and I'm the CEO and co-founder of Fuchsia Shoes, a Seattle-based direct-to-consumer brand that makes artisan shoes with a soul. I'm a first-generation entrepreneur, moved to the US in 2007 when I landed a job offer at Microsoft. 14 years later, I've helped build many products, teams, and businesses from idea to scale. In 2016, I started my journey with Fuchsia Shoes. But before we dive into the details, I want to show you something very exciting we're going through right now. Last year, in 2020, we focused all of our energy on growth and saw a tremendous uptick in all of our key metrics. We did more than $600K in total revenue. That's in middle of a pandemic year. We managed to grow at a 4x year-over-year growth rate. We're still in the first half of 2021, and we're continuing to see a very strong growth that is putting us at a run rate for $1.8 million by year end. So what drove this growth? One of the reasons why we did so well is majority of the women are still having a hard time finding a comfortable pair of flats for all-day wear that is not plain and boring. 70% of the women in the United States wear flat shoes to work and demand comfort, functionality, and sustainability, a combination not being served by traditional retailers in this space. Non-athletic footwear is a $33.9 billion market, with sustainability driving all the innovation and growth in this space. We are serving this need with a very unique product, traditionally known as kustas in South Asia. We are using 100-year-old craftsmanship techniques combined with modern shoe manufacturing methods. We have created our proprietary shoe last and construction so that every pair of Fuchsia is maximized for comfort, fit, and durability. Fuchsias are not mass-produced in factories, but we have created a very unique supply chain by organizing groups of indigenous artisans across South Asia and procuring raw material from ethical factories. Majority of our shoes are made to order, so we're not carrying any stock. We are taking anywhere from 3 to 4 weeks to deliver the shoes anywhere in the US after we receive an order through our website. We are procuring the raw material that is needed to create enough shoes as the daily order starts to come in through our website. We have 2 artisan production facilities at 2 different locations in Pakistan that are creating the shoes in batches. We also have a logistics team on the ground that works with the artisan to manage our daily production and ensures the quality of our shoes. Whereas our design team in Seattle is responsible for launching new collections, seasonal collections that helps us stay competitive in the fashion space. We have healthy margins. Our most popular pricing point is the $99 shoe from our embroidery collection, which is yielding us a gross profit margin for more than 250%. This is after a Fuchsia artisan takes home 3x more than what they would typically make in the local markets. Our customers are emerging from all over the US. Majority of them are in their 30s and 40s. They are engaged online shoppers, soccer moms, teachers, travelers. Not only do they love and admire the beauty in a pair of Fuchsia, but they are also rooting for our brand mission. Part of what drives interest of our customer purchase with us is a feel-good story that is associated with our shoes. It goes back to the impact. What is the difference we are making in the world? Why is it important to make a difference in someone else's life halfway around the planet? To me, it boils down to empowering people to move out of the cycle of poverty that they have been stuck in generations. Move them into a position, empowered position of having a choice in their lives. To this effect, every pair of Fuchsia creates economic opportunities for socially marginalized artisans, their families, and their communities. We have done this for a little over 100 artisans in Pakistan right now, and we are looking to amplify this impact as we scale our production. Shoes are just the beginning for us. We have created a repeatable model that we can replicate in other markets across different artisan groups in different countries. That will help us diversify our product offering through our website while continuing to grow profitably. And we also have a lot of exciting products in the pipeline, by the way. We are not the only shoe company out there. There are tons of other shoe brands, but we have managed to stand out in this competitive space by offering a very unique product with a very unique story, while offering it at a very competitive pricing point compared to other brands that are producing shoes in factories. Apart from bringing this unique product, we have an amazing team with the right mix for fashion, tech, and retail to pull this off. We are ex-Microsoft and Amazon, and I can't be more proud of what our team has achieved together so far. So what's next? We are fully focused on accelerating our growth that will lead us to be on a path of a $100 million business in the next 3 to 5 years. This year alone, we are focused on production of 50,000 pairs this year with a run rate of $1.8 million in sales by year end. We are also looking to gain some operational efficiencies as we scale by reducing our landed cost from $15 per pair to $9. How are we going to do that? We have some data that tells us that there are some common sizes that we need to keep in stock at all times, get into a production cycle for 3 months, and have them ship from sea cargo rather than air freight. That will help us reduce our cost down significantly and push our profit margins to more than 350%. We have built something of great value from the ground up, and we are starting from a really good place by selling each pair profitably. So we want, the investment we are seeking today is purely to put us on a hyper-growth trajectory, be in service for more artisans, grow our customer base, and create impact that we know investors in 2021 want to see. So with that, I would like to open up for Q&A. Thank you.
Wow, great progress and traction. It's so fun to see that. To lead with traction is super awesome. So when I think about the business, I think about the two big parts. You talked about scaling inventory and production, but I'm curious on the customer acquisition side, what are you seeing in the trends for customer acquisition and lifetime value as it relates to new customers and where you're acquiring those new customers from?
So right now, we are focused on customer acquisition. Later half of the year, we change our strategy to more like retention. So we have a very strong repeat customer rate. So somebody who would come and buy shoes from us, we typically see them the second time. Right now, we have only 30 different styles, so we are hoping to improve that number by launching limited editions and collections. So we know like people are just waiting for new styles and colors. Our customer acquisition, because we are an online store, so our sales funnels are designed to just, kind of bring the person on the website and make a purchase. We are doing this profitably based on our marketing spend. So like I said, this part of the year, we are just focused on customer acquisition, and we are actually, for a $100 shoe, it's currently in the 40s. And we can bring it down by just, having more data, getting more sophisticated around our marketing funnels. Our team is like continuously A/B testing, so we know exactly what type of creatives and content we need to show to our different segments of customers to make them convert and buy.
Right. And you have some critical hires there as you look forward in the next 12 months on the marketing side?
Yes. That's basically a key marketing hire. So my team is like, we are all ex-Microsoft and Facebook engineers, so I have like the best brains to work on our marketing funnels. Like we have a lot of room to improve over there, and we are continuously doing A/B testing, and we are only going to get more sophisticated around that. But one of our key hires would be bringing in somebody full-time as a growth hacker.
Great.
Well, Afshan, it's really an honor to have you here with us today, and it was great to spend a little time talking to you last night. I'm going to shift gears over to the supply chain. We talked about this at an event we had yesterday. You're moving from a make-to-order to a make-to-stock model. You kind of referenced that, but tell me more about the logistics when you get to make-to-stock. Are you going to 3PL, or how are you going to do that?
Yes. So with 3PL, based on our calculations, it doesn't make sense until we get to 5,000 orders per month. Right now, we are at 1,000 orders per month, and we are going to continue doing this. What's happening on the supply chain side, the supply chain is in a position where we can go up to all the way to 5,000 production per month. It will be a combination of how quickly we can procure raw material. We are all doing that locally in Pakistan, so that helps us, move faster and save us from all supply chain disruptions also. And basically having more artisans join our bandwagon, so we can create that craftsmanship element intact in our product. We get that product shipped to our logistics team in Karachi. That's where it gets quality inspected. We are selling the product, we know, because we are getting compared with brands like Rothy's, Allbirds, Tom's, and we know that customers are buying from us because they love the product. So it's very important for us to keep the quality intact and continue. When we are scaling it, we don't compromise on that quality. So the logistics team is the quality team, is like what I'm also kind of scaling on the operations side in Pakistan, so that when we receive the product in our Seattle warehouse, we are currently in Woodinville right now, it just arrives like ready to ship to the customer. When we flip to a 3-month production cycle, we're just going to have like most common sizes in stock. Size 8, 7, 8, and 9 is what we just can't create enough of those. Mm-hmm. So we are going to create those in parallel while we are also delivering our made-to-order shoes, and then have it shipped through sea cargo, which is a fraction of a cost of what we are doing for air freight.
Great. When you look ahead to your product roadmap, you mentioned a few different products. Do you see the same sort of gross margins being sustainable as you move into those other categories?
As compared to?
As compared to the shoes. You mentioned what the gross margins were. So as you look at scarves and other things, do you see the same sort of gross margins?
So our gross margin right now is 250% after we are doing it air freight. So it's costing us like $6 per pair to just get the product shipped.
You fly first class. That's a good thing.
Yeah, so just to get the product shipped from Pakistan to Woodinville. That includes like shipping cost, customs duties, everything. So imagine we are going to cut that cost completely, save $6 per pair if we get it shipped from sea.
So how do you think of those gross margins as you introduce new products? You mentioned scarves and those sort of things. Do you see margins being the same?
Yes. So it will impact, like we did face masks, and we had like more than 500% profit markups on face masks. Our primary product is shoes right now, and that's what we want to concentrate on. So all the other products that we are bringing in is just to kind of complement the shoes. So we are looking into belts that will match the colors with the shoes, mm-hmm. clutches that will have beautiful embroidery by the women artisans in Pakistan. And it will help us improve our average order value significantly, and get some efficiencies on the gross profit margin.
For sure.
So I haven't been able to try your shoes because my feet won't fit in them. But I have it in good authority that your shoes don't come in a left and right.
Yes.
So they're uniform. Is that, have you had any issues with American consumers adopting that, or?
So we created our shoe lasts. We have our proprietary shoe last that are for American feet. So that's like our own. We had to get them. So back in the day when I started the company, I did a lot of surveys with our customers, and we took all of that information. So obviously we had to get our shoe last like widened, because in South Asia, people have narrow feet. Over here, they have a lot of wide feet. We are also doing it in wide sizes, which is, by the way, it's not costing us anything, just apart from building some extra shoe lasts.
Right.
That is keeping our return rate very less than 12%. Because most of the time we are getting returns as people say, we love the shoes, but we can't fit in the shoes.
Right.
So we definitely have some odd sizes that we can't do. The industry standard for return rate is more than 20%. Ours is 12%.
Okay, well, we are out of time. Thank you so much.
Thank you. Thank you.
Hi everyone, I'm Tegan Peterson, a partner at Moss Adams here in Central Washington. We're a professional services firm dedicated to help our clients grow, manage, and protect their prosperity. With more than 25 locations, we advise clients at all stages of development, from startup to expansion and transition. On behalf of Moss Adams, I would like to thank you for joining us today. Moss Adams has been a proud sponsor of the Flywheel Conference 5 years running, and we're thrilled to celebrate entrepreneurs, investors, and community members coming together. From preparing IPOs to entering international markets, discover how our services can help your business thrive by visiting our website. If we can partner with you in the development of your startup, we'd love to connect with you. It is my pleasure to introduce founder, CEO, and author Dave Parker, who will be moderating a panel focused around the startup ecosystems in the Pacific Northwest. Dave is a 5-time founder, entrepreneur, and professional board member for tech growth companies. His 20-year career has highlighted his ability to innovate new ideas, scale products and companies in the U.S. and internationally. He is a frequent speaker and published author. Dave will be joined by panelists Brian Vera, Cindy Donahue, and Minda Bruce. Please join me in welcoming Dave Parker and our panel to the Flywheel stage.
Hey everybody, welcome back. I've changed seats, you can tell. I used to be on a different stage in a different chair, but we're doing this interview from a different room and bringing it to you live. Thanks for joining us. Before I start, I want to say thanks to all the sponsors. For those of you who are new to the startup ecosystem, it doesn't work without the sponsors. So folks like Clark Newberg and the Washington Technology Industry Association. And if you're here in person today, I'd encourage you to grab a copy of my book that's up on the table upstairs. And it's brought to you free from those sponsors. So thanks to Jenny and the team. And I want to introduce you to Brian, Minda, and Cindy. So I'll give them a chance to introduce themselves. And our topic today is talking about the startup ecosystem in each of the respective cities and kind of what we're seeing both in the Northwest, but also what are the best practices, more of a global perspective. So thanks for joining us. So with that, I will start off with Cindy. Cindy, you want to introduce yourself and tell us a little bit about Spokane?
Sure, thank you. I'd be happy to talk about Spokane. I'm with Ignite. We are an accelerator. We focus really on funding, mentoring, and enlightening entrepreneurs in our community. And we work a lot with our community partners to grow our ecosystem.
Awesome.
In Spokane itself, we're actually the 5th hottest housing market in the country right now, and Coeur d'Alene is #1. So we have a lot of inbound migration and lots of growth and lots of startups coming in.
Awesome. Minda, how about you?
Yes. Hi, I'm Minda Bruce. I'm from the Seattle ecosystem. I'm a pre-seed investor, so I get to work with other angel investors and early stage VCs and early stage founders in the Seattle area and all over the country. But my base is the Northwest, and I'm really excited about the talent that we have.
Awesome. Brian?
Cool. Brian Vieira from Bend, Oregon. I work for EDCO, which is the local economic development organization in Central Oregon. Primary job is to connect entrepreneurs with resources, which is a weird function for an economic development organization. They usually shy away from the start function because the ROI is terrible. But we have enough startup density in Bend and Central Oregon in general to make it work. So that's connecting them with capital and talent and other resources they might need.
Awesome. Well, let's start with context first, because I think one of the things that founders who are new to an ecosystem don't know all of the great things that are going on in a particular ecosystem. And I think about when I started my first company in 1998 in Seattle, like there wasn't a whole lot of the startup ecosystem going on at that time. But tell me about some things that are happening in your communities that you're super excited about, or if you were having coffee with a first-time founder, where would you point them first? So you want to start over there?
Sure. Well, I would point them towards obviously some of our programs. So just getting to know other entrepreneurs and investors in our community. We have a really great cohesive ecosystem in the Spokane region. And so we always are referring entrepreneurs to each other. So whether they're looking for talent and they need to grow, Ignite has a platform called IgniteMatch.works where we have jobs. So if they're looking for talent, if they're looking for education, we have all of our university partners. All of our chambers of commerce are really involved in our startup ecosystem as well, and they put on a lot of programs to educate entrepreneurs. So I don't know if there's any one place. It really would depend on entrepreneurs. So if they were new to the Spokane region, just trying to help them integrate into the community in general, and then helping them point them whatever they might need.
Got it. Minda, how about you?
Yeah, I think COVID's seen a lot of transition. I think previously I would have talked about some of the co-working spaces and some of the events that were happening there. And with a huge shift in that opportunity for sort of convening in person, I think the one really a nice, consistent twice-a-year pattern of workshops and events is the Seattle Angel Conference. So whether someone's looking for getting to connect with other founders and angel investors, I think it's a great place to learn and connect who's in the ecosystem because it's a nice cross section of people, and there's a real opportunity to learn. And I think it's a nice hub.
Well, and then you bring up an interesting point. There's two sides of the same coin. There's an ecosystem as it relates to angel investors and grooming new investors, but also as you relate it's what's there for the founders, and you're really trying to build kind of both sides of the ecosystem at the same time.
Absolutely. So. Yeah, and I, as part of my work at First Row, we've really made a lot of effort to reach out into the community and create opportunities for people who are interested in angel investing to learn what does that mean, and is it something I want to participate in, and then try and help them find those on-ramps that work for them personally, but then also really bringing founders into that same conversation about understanding the investor perspective, and then finding and connecting with their peers, because I really feel like that's, for me, when I was in the ecosystem as a founder, I found the most benefit out of really deeply connecting with my peers, and then they became my best guides for really where the high value places were that we could show up together and facilitate those casual introductions that turn into really long-lasting relationships and threads that you want to follow. I think it's always really interesting to go to any kind of event with not the intention of making a connection that's going to translate into an immediate action, but that you're really there to listen and learn and participate and understand that things don't happen overnight in those relationship building opportunities, and to push too hard is often a way to sort of limit your own credibility.
I want to come back to that as we get to the later on in the discussion, because I think that whole concept of give first and building relationships versus transactional is huge difference in how founders kind of approach the market. So I want to come back to that, but tell us a little bit about what's going on in Bend. And
yeah, Bend is booming. It has the boom bust cycle that a tourist town typically has, and I think we've been booming for longer than we expected, for sure. What we've tried to do as an economic development organization is diversify, so we're not as dependent on housing and tourism as we used to be. And I think we've been pretty successful with building. We know that there are pieces of the puzzle that are not in place. And we've slowly kind of put a lot of those pieces into place, or been a catalyst for that. We have 3 funds now in Central Oregon, if you don't count the Bend Venture Conference, which we put on each year. So the funding is there, at least in terms of proximity. We have decent legal resource, although that can be outsourced from bigger areas. Co-working spaces have taken off. We had none when I started at EDCO 7 years ago. Now we have like 6. I don't know how many we have now with COVID. I haven't looked, but they're there, and we'll probably start again as things open up. The university, OSU Cascades, is accredited. It's still in its infancy, so that part of the ecosystem is kind of emerging. You kind of wake up discouraged with the sight of the path and how far you still have to go. But if you look at where you came from, it's pretty impressive. I mean, Bend is really, it's grown far faster than I thought it would in the past 7 years.
So I remember sitting at the first startup week we ran in Seattle 5 years ago, and having somebody in the audience like stand up in the middle and say like, hey, I think I'm going to move to San Francisco because there's no ecosystem here. And part of me was, I totally understood where he was coming from because he wasn't from the ecosystem, right? And he hasn't seen it change over the years. At the same time, sometimes we don't do a great job of promoting what we are doing. And it usually starts with that conception of like, oh, we have limited access to capital, and right, it's a little bit of the age-old story. So how do you all feel about, telling your entrepreneurs, like, do you want to focus on your market to raise funding? Do you want to focus on the Northwest? Do you want to focus on the West Coast? I know in talking with some friends in the ecosystem in Victoria, Canada, they're like, you guys think you live on an island. We actually physically live on an island, and there's actually no institutional investors on the island. So they tend to end up being a little bit more scrappy and bootstrapped, but they're coming to Seattle to fundraise. Let's talk about fundraising first, because that's always a topic founders want to talk about. So Minda, how's it changing in Seattle?
Oh, I think in a really positive way. I think we're moving in a great direction. In addition to a really strong angel ecosystem, both individual angels that operate outside of groups, and then some groups that are, continue to grow and be strong, and new ones emerging. We're also starting to see, and I'm part of a wave of new sort of operator-led small venture funds. And that's an opportunity for us to really be catalysts for funding rounds, is how I see it. And then that creates opportunities for angels, or maybe angels are the ones that are seeing something and bringing it to us. But I think that's a really symbiotic way for our ecosystem to work at these very early stages to help founders, when they are investable, bring funding together pretty quickly so that they are able to do that in a concentrated way with a syndicate of investors that are ready to come together. And I do find that is happening in our ecosystem, and I'm always delighted to see it happen. I don't feel like people have to leave our ecosystem to raise capital. I think that that's not true. I think there is good capital here, being in Seattle. But I do also see that, as you move up into, Series A, Series B, you are going to want to build a broader syndicate outside the Northwest. That is a reality. But for the very early stage founders, I think that there are, great resources and connections into capital when you're investable.
Well, let's go to that point, the when you're investable part, because that applies to all of our markets. I think the founders sometimes have the difference of like, I have a need for money versus my readiness for money. So do you guys want to take that one on, Brian?
Yeah, I mean, when I outlined my job title as connecting entrepreneurs to resources, it was never meant to be 90% of the conversations being on funding, but that's what it is, because they all feel like that's the focus. And so what I've done is kind of map the capital spectrum, because I think a very small sliver of them are VC kind of
venture ready.
Map. Yeah. Ready or even path, right? Mm-hmm. They'll never be, they're just not going that way. So I try and steer them towards, and I don't know, right? You can never know for certain. You can have your guesses, you don't want to be wrong, but I try to steer them towards what I think is the most probable path, whether it's a CDFI or debt
break down that acronym for people who don't know what a CDFI is.
Community Development Funding Institution, which will step in where a bank won't.
Right.
On the debt side.
So if you're a services business or you're a local business, so I would probably break them into three categories. You have venture scaled businesses that can take outside, they scale disproportionately. Mm-hmm. You have services businesses, which aren't necessarily geography focused, where CDFIs could be a funding mechanic for that, where venture isn't. And then you have local businesses like restaurants, which generally are focused on zip codes. So depending on where you are in that spectrum, that kind of points you into what capital stack you should look at.
And we don't work with restaurants or other service businesses that are non-traded sector. Traded sector just meaning doing business outside of your immediate region.
And if you're not in Bend, there's other folks like you in these other markets that
There are. I have counterparts throughout the Pacific Northwest, really now, people that I can reach out to that do kind of the same thing that I do. Mm-hmm. But I think most of it on the fundraising side, if you were pursuing venture angel, it's the work done before you start the actual raise, like actually building the story, making sure all the pieces are in place that a funder is going to want to see, and then deciding when the right time is to pull the trigger. And if that's done right, it can be quick. If it isn't, it can take forever. And you have this open-ended funding round that doesn't fill and has rolling closes and just takes forever, right? It's painful. If it's done right, it's great. It can happen. You can close in 2.5 months from beginning to end, and you raise more money than you thought you would, And,
right.
Yeah, but it has to be the right company.
And if it's been on the market too long, it's kind of like a house that's been on the market too long, a deal will get stale. I know, especially in Spokane, you guys are a much smaller market than Seattle. I imagine you guys see deals that get, you're like, they probably went to market too fast in their fundraising story.
I just was going to say, back to the fundraising question, we kind of are awash in capital. I mean, I think that from pre-seed, Ignite has funds that are for companies or for tech startups that are explosively growing or have that opportunity to lead them until they're profitable or until they're bankable. But we have so much capital. I mean, it really at any phase, if a founder is ready, and if they are, I think we are able to handle that. And if not, we also have community partners throughout the Pacific Northwest where we can hand them up. So I think we're really awash in capital. I think it's just a matter of it's just a matter of finding founders that are ready. That they come in, they're not quite ready. That we mentor them to see the areas in which they need to become ready, and then they come back and pitch again. And so I mean, I think there's money's there. I think if they're ready, the money's
there. I think ready and traction are two really hard words for founders to understand how it applies to them.
Well, let's talk about traction for a minute, because traction as a founder tends to represent something the investors want that I don't have yet, that seems to be something that's always perpetually around the corner. So fill in that blank on what's traction in your world that investors, that the founders can look at and go like, oh, and that's what they mean.
Right. I think of, I'm a believer that early revenue can often represent a false start. And so what I'm really interested in are signals from the market. And I think of traction as literally being like a physical pull that you can observe through signals from a customer because they really are embracing your solution as something they never want to go back on. There's an isolated, concentrated, high degree of success with a certain customer where there's an expansion opportunity that's, viable. And so I really look for these, what I think of as soft signals. And it's not that there's a spreadsheet you can put them on, and it's not always connected directly to revenue or revenue growth month over month over month. It is, for me, it's sometimes much more subtle, and I feel like that's where hopefully my operating background and listening abilities and sort of Q&A with a founder can really sort of help me draw those out when they're there. And often I find that founders are telling me those signals and they don't even realize it. And that's always kind of exciting, because then I get to point out to them something that it's like, hey, that's actually a really interesting aspect of your business that's going well. And sometimes they take it for granted. That, hey, their daily active use is this super high number. And they're just sort of like, well, of course, because that's what I thought when I launched it. It's like, no. Usually that just doesn't happen.
Right.
So, I enjoy those conversations and exploring where those soft signals are, because I do think that that's what makes something investable at the very earliest stages. It's not necessarily about numbers and revenue.
Right. And Cindy, what advice are you giving to founders? You're like, hey, there's access to capital, but kind of here's how you unlock it. What's the advice you give?
I think that through all the different funding mechanisms that we have in the Spokane region, I think we're really investing in the people. And so like you can tell when they have the passion, they have the drive, they have the product. It's really, you can tell when, I don't know, when you say traction, like, well, they're ready, they're not. There's always that it factor that someone has, and you can tell if they're ready, if they're not ready, and if they're not, then it depends on the founder. It depends on the company. Maybe they need to find a CTO. Maybe they need to have a sales and marketing expertise because they're more on the tech side. It's really rounding out the team, I think, and being ready to grow explosively, to be able to grow whatever it is that they're after. So.
Yeah, one of the questions I'm always sort of trying to answer as I talk to a team is, would I hire this team to do this? Right?
Right, exactly.
And wanting to see an answer to that is sort of a lot of where I'm probing at with, from a couple of different angles.
Yeah, to expand on that's the number one thing I look at is like team traction, right? There's revenue track, that's easy to see. It's a number on a piece of paper, and you can look back and you can look forward, but can the founder sell not just whatever his product or service is, but the vision of what the company is going to be to people that are the best that he can attract without paying them market rates or even below market rates, and get them to buy into the vision and take equity in the company.
Yeah, it's your first sale, really.
Right.
Is
you do that, and he's started to build what looks like a complementary team, like people with different sets of skills that complement his. that's huge for me.
Or hers, just to be clear.
Absolutely.
So, yeah.
Which I actually see probably more of than the his now.
Yeah, which is it's a good trend.
Yep.
I want to shift a little bit and come back to kind of when we got into COVID, this was super awkward, and as we're coming out of COVID, we're all vaccinated, so everybody knows as well. And we came into an event last night with people without masks, and it was kind of crazy. What's your prognostication on what's going to happen as we come out of this? It feels like events are going to come back in some way. There's more startups, I think, as we see more people have either been job challenged or jobs terminated, and there's lots of hiring going on. And when there's lots of hiring going on, some people will be like, oh, I don't know if I'm going to pursue this idea, maybe I'll wait. How do you guys see the market coming out of COVID as it relates to founders?
Well, I personally am a person who enjoys in-person events because my first foray into the Seattle startup ecosystem was showing up at a Seattle Startup Week. And I literally was like, this is amazing. And it just was a multiple day sort of effect of connecting in with people. And then that just sort of continues to be the place that I lean forward into is in-person events where people get the opportunity to have those serendipitous sort of connections and really find like-minded people throughout the ecosystem that they would connect with, maybe that they wouldn't have thought if they just looked at LinkedIn and sort of picked and choose from that. So I'm really looking forward to seeing some events come back. I know we'll be organizing some, and I'll be supporting any others that are about getting founders and funders together.
We're actually doing our first event this month in live for those that are vaccinated. So we're going to be open. But I do think in terms of events that the future is the hybrid model. So we're looking at using platforms from a local startup in Spokane that had actually relocated from Portland called Cloud Engage, and using their platform to be able to have it kind of seamless, whether you're there or you're not. So I think in terms of events, but in terms of the ecosystem, I think the big thing coming out of COVID is the inbound migration. I mean, we are just booming. So I think as people flee the bigger cities, they want more of a better quality of life. They want access to the outdoors. Regions like Coeur d'Alene and Spokane, I mean, we are just booming. Yeah, it's just booming.
Yeah, I think there's going to be massive opportunity. Whenever there's a chaotic event, there are opportunities that, like, some of the best investments you could ever make are in times of chaos, if you're right. And I think there's a unique situation where there's been massive supply destruction. I know, because I've had a business that went under. So my side of the supply was destroyed.
COVID created both massive headwinds and massive tailwinds and very little in between.
Right, and the demand side is pent up. So you've got massive pent up demand. If you can project into which markets that's going to be pointed and satisfy supply in a scalable way, I think that's one way you can take advantage of that opportunity. I think there'll be companies that get started now that are huge in 5 to 10 years. Remote is the other side of that. We've always been kind of a remote hub. 12% was kind of the high watermark for remote workers in Bend. I was one of every, 8 people that were employed in Bend were working for a company outside of Bend. And that's been accepted as the new norm. And when you look at companies hiring, they're de-emphasizing geographic proximity now.
Right.
You can hire people anywhere, and they were forced to get comfortable with that.
Yeah, place doesn't seem to matter as much as it did, 24 months ago.
Absolutely.
Right.
Even with the founding teams, right? I mean, you used to have to, everyone has to live in this city, and now it's like, well, maybe not, right? I mean, that's the change. It's changed the way that we live.
Yeah, and as an investor, I'm able to take a lot more meetings with a lot of people in very different parts of the country, and so there is a efficiency in access that has been extended to a lot of founders in cities that didn't necessarily have large ecosystems before, or it allowed them to, just extend the amount of investor touch points that they got and just get that much stronger as a result of sort of that filtering process.
Yeah, I wonder how many companies have actually raised an entire round without ever meeting the funders themselves.
I know we sold a company last year in the middle of COVID that the sellers didn't actually meet the buyers. The CEO made one flight to Atlanta. The entire transaction was done without meeting anybody in person. Yeah. I want to come back, and it's not all rainbows and unicorns in each of these markets. And I guess I'd ask the question, like, what of the things you guys are seeing are still aspirational versus actual, where we still need to do X? Like, I think every market looks at the market bigger than them. Like Seattle looks at San Francisco and says, well, we're not the Valley. Right, and then Vancouver looks at Seattle and says, well, we're not Seattle. But none of us ever look backwards at the smaller cities and say, oh, we're so much better than them, right? We always look at the people we're not. So when you look at your markets, where is there room for improvement? If there's somebody listening from Spokane or Seattle or Bend, like we really need people to step up and lead in this area, what would that area be for you all?
Do you want me to start? So I would say in Spokane, the good thing about the inbound migration is it's helping our diversity, making Spokane more diverse, because if we have remote workers that live in other cities and then they maybe want to move their startup to Spokane, well, can their spouse find a job, right? Yeah. And does everyone feel comfortable that it's a diverse community to live in? So I think it's improving diversity. And also, because of the inbound migration, we're also having housing. So if you're going to grow a startup or move a startup to our area, can everyone find homes? So I think the migration is causing both positives and negatives, right? The diversity is improving, housing is crunched. So I think those are our two biggest at the moment, anyway.
Yeah, the things that I am focused on right now in terms of trying to, see what I see and fix what I can and contribute what I can is that in the Bay Area, one of the things that founders have the benefit of is sort of the language of investing is in the water. They all know what a safe is. A lot of them are already angel investing. They talk about it really, fluently in that language. So then when they show up and talk to investors, they don't feel the power and information imbalance like I think they do up here in Seattle. And so I do think that that's something that we can do to better equip both sides to just have more efficient conversations and less, so we do end up doing a lot of education for founders to give them those tools, but it's still new.
Well, to your point, I think there's always that power dynamic between, there's information asymmetry, the VCs know the numbers that the founders don't know, and how do you level that playing field is a big deal.
I mean, I could completely intimidate a founder by saying, well, are you doing this on a safe, a convertible note? What's your cap? Why? I mean, you can just really dive into some very VC type talk, and if a founder is a little bit flat-footed on that just really throws the conversation about capital. So, which is already a little bit fraught with some differences in power and information. We can exacerbate it by through the language and the knowledge that we carry, and don't necessarily think to share early. But I would love for founders, as they're getting started, to really focus on getting some of that knowledge if they don't already come with it. And I just think other ecosystems have the benefit of it just being more percolated throughout the large tech companies and things like that. And the other thing is that I want us to be more, have more early conviction as early stage investors, move more quickly, and fund more companies. I think that other ecosystems have sort of an enculturation of moving very quickly and being decisive. And I think Seattle has a little ways to go on that. So I look.
We have lots of tire kickers and angel investors who want to come across as a lead investor, but they actually never have. And so that leaves investors, or at least founders, feeling like, oh, I met this awesome angel investor. And you're like, have they ever led? And the answer is probably not.
Right.
And figuring out who they are early is super helpful.
Right. And I think that one of the other things is sort of like, how do you diligence an investor? What questions are appropriate to ask, and when can you ask them? Because I think you can learn some of those things fairly early on, because it's, the founders have to use their time well.
Right. The founders need to qualify the investors just like the investors are qualifying the investors.
Absolutely. And the more that they feel that power imbalance, they don't even think to do it.
Right. Yeah. Brian, how about you for Ben? What's aspirational you need to, here's my ask, other than a new microphone?
Yeah. So we have a great mentor. That's one of Ben's strengths, I think, is that there are people, you've even gotten involved with Ben, that is there to answer questions like that. If you want the resources, they're not that hard to find in terms of mentoring. The same piece of the puzzle that was missing when I started, at least that I think is missing, is still missing, and that's a function of our size. And I think it's programming, accelerator type models. There have been several kind of false starts, I guess, with different ones that just couldn't make it work. It's a hard model to make work, and I've tried to understand it, and there just isn't a large enough corporate, VC, or university interest, because those are the ones that kind of have to be your sugar daddy. You need a sugar daddy for a while if you do a traditional accelerator type model. So that's kind of the piece I've always chased, and we've talked to Techstars, and they're like, well, it's $500,000.
Right.
every
Yeah.
year.
Yeah.
Not just the first year.
Well, it's interesting, Bend and North Central Washington region here and Boulder are all kind of about the same size, right?
Yeah, Boulder has multi-billion-dollar funds, though.
Right.
So.
But they didn't 15
Right,
years
true.
ago, right? So I think
Yeah,
that's where you have to have one of the things we've been working on with the WTIA is kind of having a 10-year view of how do we up-level Seattle. But when we started it, and we're just starting the 4th year, but when we started it, people were like, 10-year view. And I'm like, I don't know how you can have anything shorter than that. It just doesn't make any sense to have a shorter view because it takes that long to do it. So I want to come back to the topic that we started down, but I want to, in your advice to founders as they engage in your ecosystems, one of the things I've taken away from being around Techstars is the give first mentality versus the transactional mentality. So I had a founder attend one of my events, and I have a very structured way to pitch, right, at the event. And I always warn them that I'll take the microphone away if you take a different pitch, because we have 50, 60 people who want to pitch something. And I gave him the very structured way to do it. It's on the screen, and of course he went off script, and I took the microphone away. And
like parenting.
he was, yeah. Self-awareness is one thing I found you cannot teach. Like either. It's a weird one. And then he showed up at an event I was running that was a pitches event for angel investors. And he's like, do you remember me? I'm like, of course I remember you, right? It's like kind of hard to forget. He's like, you really pissed me off. I'm like, that's okay. You'll get over it, right? But I think that mentality of like take first versus give first is advice that I'd like you to weigh in to help founders think about how they're showing up at events. One of the things when I was with the fund, one of the things we did every month was there was an Alliance of Angels call that has early micro VCs and us and the Alliance of Angels group, and somebody's like, oh, did you see that deal? I'm like, yeah, we saw that deal. We thought it was overpriced, right? So what the founders don't know necessarily is that all the investors are all talking, right? And if you go out with like, here's my cap on this one, and then here's my cap on a different one, and they're different, then we're actually going to talk about it. And I don't think the founders actually think that. So speak to how do they show up, and how do they become part of the community from a give first perspective as well, so they can actually contribute to the community too?
Go ahead. I would just say that a sense of curiosity, right? A sense of curiosity to learn about the investors, to learn about other founders. And I found at our Spokane Angel Alliance meetings is that we have community leaders and founders and investors all together, and that they all are communicating among each other and again forming relationships and helping each other as founders of other startups. And so I think that makes a huge difference. But Spokane is still small enough where you can call pretty much anyone and they'll meet with you, right? I mean, if Chip Overstreet, the head of Spiceology, if there's a founder in town, he'll meet with them. And so we really have a relationship building and a mentorship network that I think is really working. So I think showing up with a sense of curiosity, I would say, and that you're there to help and to learn first instead of ask.
I think a sense of gratitude is important. Most of these events are organized by volunteers. And one of the first things that I did during a Techstars week, I think, was thank a person with a handwritten note who had organized a series of events for women entrepreneurs. She got several thank you notes from a bunch of people and invited us all to a meeting and said, you are all the ones that said thank you, and I want you to all know each other. And these are powerhouse women now. Like, we were all sort of at the beginning of something. And she connected us all and really sort of said, like, let's just always completely support each other in what we're doing, because we clearly are sort of coming from the same kind of place. And so that really got internalized with me, and I've just tried to kind of continue to bring that forward. But I think it's showing up with gratitude and not always looking for the most powerful person in the room, but who is interesting that you might talk to and get to know and learn. And don't always just gravitate toward the part of the room that seems to have the most energy, but like really think about like who you can talk to in that sense of curiosity, but also just gratitude for the people that organized this and brought people together and are putting it on and clearly have an intention. Yeah,
it's an interesting, I haven't put a whole lot of thought into but I guess I've always looked at it from the other side, like what does an investor want to see when a founder shows up, and it's a little bit of that edge, but a lot less of the expectation. There's just this weird dynamic that happens the first time an investor and a founder meet, right? It's like, well, you're meeting for money, so it ends up being focused on that transactional. So Yeah, it's weird. I like founders that are aggressive, and have a little bit of a chip on the shoulder, but the humility and, like you guys have said, curiosity, like, are these guys going to be able to learn? Because they don't know everything. Or are they going to be able to hire? That's what I like to see kind of brought to the table, is asking as many questions as you get asked, you know? Not just kind of being open to what you don't know.
Yeah, and I'd say to be cautious to not be transactional, which can be really hard because you're at an event to meet the angels and meet the VCs.
Yeah,
and
dive right into it.
So, and think about it from the perspective of how do you walk away from an impression with the investors, or how do you walk away from an impression with the other founders? So I remember I had a CEO group back in 1998 when we were our first CEO group that we were part of, and all those founders wanted to do really amazing things. And this is not this is a community, right? So one of the things I would encourage you as a founder to think about is the fact that nobody owns community, right? I don't own the community, Minda doesn't own we don't own community. And like every community, it's kind of like that weird uncle that shows up at Thanksgiving, right? And you're like, there's always a weird uncle, right? Or aunt in that case. But, and there's people that you won't necessarily get along with, but you don't necessarily have to not get along with them, right? So just know that that's part of the community and what you bring to the community. I think that I would encourage you to, keep showing up, volunteer. Like when you come to one of these events, you don't have to be like, after doing tons of events, right? So when I got here early this morning, I asked Jen, I'm like, what do you need help with? So because I'm like, I'm used to events. Like I don't know that I can not help, right? But look at how you contribute, and because that'll change back to the humility. And I do want you to have a little bit of edge, and I want you to have the conviction that that, when I walk into a room of 100 founders somewhere in the world, I love the fact that they're all the same. They may speak a different language, they may look different, but they're all slightly delusional, right? Because you walk in a room of 100 people, and everybody knows 70 to 90% of the people are going to fail, and everyone knows it's not them, right? So I love that little bit of delusion that comes with it as we go.
Yeah, I like the founders who don't tell you that they're going to do something if they get funding. I like the ones that are telling me that they're going to do it, and I'm welcome to come along for the ride.
Right.
It's going to happen. Regardless of whether I get the money from you, from them, or at all, and this is the direction I'm going on. And
they're not permission seeking from the investor group.
It builds that FOMO right from the beginning.
Well, it shows leadership, I think, ultimately, and stewardship of their own idea. That they don't feel like they have to pass through sort of permission level.
Passion and confidence.
Yeah, there's a way to ask without ever asking, right? Like you almost feel like, well, he didn't really want money from me?
And deals get pulled, not pushed, right? So when you are working with an investor, the fact is if they're interested in the deal, they're going to pull the deal along. You don't have to push the deal along. I think the math on it, too, is we looked at the last fund I was with, I looked at 164 deals in 1 year. It was like in long form looking at deals, not like, oh, they sent me a deck. And we're watching your numbers, back to the traction topic. By the way, I think traction's math. Right, so just so you know, there's like math involved, versus like, vanity metrics. Those don't do it. So think of it from the perspective of, what did they walk away asking a question about? Did they walk away asking the question, what did they do again? Or did they walk away going like, how do I get a check into that deal? Yeah. Right, and I think it's back to the preparedness thing that we were talking about. So in the couple minutes we have left, why Spokane? Why Seattle? Why Bend? I'd love to hear your guys' pitch of, hey, listen, people we're a little more transient than we've been in decades. What's going on in Spokane you're super excited about? Where you're like, hey, come to Spokane as your investor, or like should somebody from Seattle come and pitch you guys in Spokane as well?
They could, but I mean, there are investors in Seattle. But I would say that we already have such an inbound, it's already happening, right? I mean, the inbound migration is huge, and the funding, the mentorship, I mean, the startup ecosystem is growing exponentially. And I think that people they're fleeing the big cities. They want to have a quality of life. And so for Spokane and the Coeur d'Alene region, we're really kind of one area, and the partners coordinate in that region. And I think it's just a matter of having an outdoor lifestyle, having education for your kids, having opportunity. And as a founder, you have a longer runway in somewhere like Spokane than you do Seattle. And so I think that we have such a great sense of partnership too among the ecosystem. We are always in communication with our university partners and what's happening with them, with our chambers of commerce, with all of our other accelerators. And so we're all working in concert to help founders succeed. And so there's really that sense of excitement that we're working together to grow our ecosystem and to make it a place where founders want to be and where their families want to be as well.
So Brian, I'm going to go to you next so we have a chance to defend ourselves in Seattle.
Right. Yeah, I was going to say, who wouldn't want to be in Bend? We're attracting enough of you guys from Seattle as it is. But it's the same for founders as it was for me when I moved there. I moved there because I could ski, mountain bike. I mean, it's pretty much everything that you'd want from a lifestyle perspective. And I think there's a critical mass of companies there now that the risk of coming there, working for a company and not having it work out and having to go back where you came from is now gone.
Right.
So, yeah.
Well, a chance for us to defend Seattle a little bit.
Absolutely.
Yeah.
I mean, I think that there's the concentration, right? And we have the University of Washington. We have, multiple universities. We have like Fred Hutch. We have all these centers of innovation that are institutional level. We have our own Techstars program, and all of those just spawn a lot of interconnectedness, and ultimately it comes down to just sort of energy in the system that allows new things to continue to happen and growth, I think, ultimately to be the engine. So I think
we're still short on reinvesting in recycled capital. Right, so starting to see founders exit and then reinvest back in the ecosystem is something that the Valley is so unique at. Yeah. I would tell you we're starting year 4 of a 10-year plan in spite of COVID, and the answer is we're not done yet. You can find me, so my Twitter handle is Dave Parker SEA, and will continue to be that. So yeah, I think there's, I'm a huge fan of getting to come and participate in all of these emerging markets because it's so exciting to see what you guys are doing, because you're actually using the best practices that we've already. There's places that people have already, trot out these trails in advance, which is great. So thank you all for your time today. It's exciting to hear what's going on. And with that, I'm going to throw it back to the Flywheel stage.
Thank you, Dave Parker and panelists, for coming out to Wenatchee today. Hi, I'm Jeff Austinson, and it's a pleasure to be with you here today on behalf of North 40 Productions. At North 40, we are on a never-ending search for the best way to share your story through film. From concept to creation, we deliver films that capture, engage, and inspire. And we've been honored to partner with NCW Tech Alliance to help share the story of Flywheel over the years. The next company in the Flywheel competition is Motis from Seattle, Washington. Motis is a cloud-based application that reimagines and personalizes the employee development and performance management experience and creates a high-performance business culture. Presenting on behalf of their company is CEO Rick Beaton, and our investors on stage for follow-up will be Belinda Tidd and Glenn Prestwich. So please join me in welcoming Motis and the next set of investors to the Flywheel stage.
Meet Emma. Emma's a chief people officer, and even though she's back in the office, she's having the dickens of a time trying to keep track of where all of her employees are in this new remote context. In fact, she has over 100 managers, 900 independent contributors, and every one of them wants to be individually developed, cultivated, and treated fairly. The major problem for Emma and her employees is that they really don't have one centralized location to turn to that totally maps to the entire employee experience. And what's worse is that it's not just unique to Emma. With business today and the rise of the knowledge economy and the redefinition of work that we're undergoing, it seems like employers are struggling, surprisingly, with managing their workforces. And these systems, the processes, and the tech stack that we're using now is looking terribly outdated. Businesses, what's even surprising is that there's a fundamental overuse of apps that seem to apply to one particular thing. So, for example, we have pulses that apparently try to measure emotion and mood. We have surveys that are constantly measuring employee engagement. We have learning management system, wellness systems. There's a plethora that's a bewildering set of applications that are being used. So much so that people, when they're coming, it seems like they're trying to sell to people like Emma their solution that solves one of her many problems like that. So HR tech right now, from my perspective or vantage point at least, it's a bit of a cacophony. It's a deeply fragmented, noisy space. I tend to think it's a mess. But is it working? That's the question. My grandmother used to say, well, the proof is in the eating of the pudding. The data that's coming out, and this is really current, suggests that it's not. Over 50% of employees are actively in a job hunt right now, scaring the dickens out of people. 75% are reporting a deeply fractured relationship with their manager. And here's the kicker. It's not because we're not spending money. $16 billion are being spent right now in human capital management, and over $87 billion are being spent in talent development training. What this is indicative of, I think, is a fundamental change in our times. The cultural revolution that we're going through, the redefinition of work. We need new technologies, we need new systems and processes, and at its core, we need to fundamentally redefine how we do talent management. This is why we created Motis 2 years ago. The goal of Motis is to try to reimagine and rethink the talent development space. Our application is designed around a research-based, continuous learning and performance management system that leads to behavioral change. The struggle of HR, just between you and me, is that they don't have the science at the core of it that should be shaping the systems and processes. So our application personalizes the employee experience. It incorporates and integrates all the surrounding systems that are necessary, the ecosystem for the employees. And the third part of it is actually maintains a historical record for the entire life of the employee with the firm. And maybe most importantly, it actually reduces the employee-related cost. Let me tell you about a Motis success story that tells you something of the power of what we're trying to do. This is Kate and her manager, Devin. Kate's one of these cool, high-potential designers that comes into a firm. Smart, intelligent. She's been with the firm 2 years. About 9 months into it, all of a sudden, she was on shaky ground. She was not getting on with her teammates. She was hard on clients, and she was becoming sadly toxic in the organization. And the sad part of it is she started to flounder. And she used the language, I felt like my career was slipping through my fingers. She was also, as part of the high potential, they're using our product. They had a part of our leadership academy skills. They're clearly identified. The career path is identified. So the manager actually, who's adept in these skills, says, I think we're struggling with empathy, which she was. We gave a list within the tool. We have a definition of empathy. We have curated content from some of the best content providers for her that creates consistency throughout the organization. And most importantly, they're behavioral markers of what does empathy look like behaviorally within the organization. Kate worked for a long time, 2 to 3 months, incorporating also the goals, the feedback, the check-ins with the dashboards and the global view. She actually came as strength in that area. She's now thriving. 2 things for the employer. 1, they created a loyal employee because they were proactive and positively engaged with her. And second part, they saved half her annual salary, which was the replacement cost for someone like her. So they saved themselves $60,000. When you look at our competition, it illustrates the issue in HR tech. People need integrated systems to be successful and change. It's part of what we know from science. And all of these groups, you can see how they're adding individual pieces, and they call them functions, but the very fact that it's so atomistic and functionally oriented is why they don't work. Our system incorporates everything except the learning management system, which we incorporate ourselves. So now the business. The market opportunity, as you know, in HR tech, or you should know, is huge. The TAM just in our little space is $16 billion globally. Feels like a flea eating an elephant. So we focus specifically on professional service firms and tech workers in the U.S. That's still 30 million employees. Our goal for the next 2 years is to have 31,000 users on the system. That'll basically lead to a net revenue of over $3 million. We've established we're getting tremendous traction. We've got our little cadre of customers. We've been live in the wild for about 3.5 months. We have our current customers who are building strategic relationships. One that we're excited about is at the top, Absorb LMS. They're in 29 countries with 24 million users, and they're very excited about our product because we actually help them be better and can help their content be pushed into their space. Our sales funnel, we have a direct model right now, in addition to trying to establish partnerships. For 3.5 months in HR Tech, we feel like we're doing fantastic. This is just an example of a few of the companies that we're working with, and within 6 weeks, we anticipate that we'll be signing 800 users. Our rate is $15 per user per month, so that works out to about 9,600 MRR by the end of June. In the classic revenue, we have our classic hockey stick for you. You'll notice at the top line, the users goes from 4,000 this year to 375,000 in 5 years. The year-end annual run rate, because it's a subscription for investors, I think that's probably the most important line on that for you, goes from 600,000 at the end of this year, which forms the basis for next year's budget, all the way through 6,015,000, all the way up to 67 million in 5 years. It's funny, when you look at the TAM, it doesn't seem like it's that much. We've assembled a great team. Myself, I have 3 decades in this as an academic and leader. Jen is from Stanford Design School. She's sitting over there. She's done a fantastic job. Sam Kalk is our biz dev lead, who is with ADP and specializes in this space. And we have Conrad, who's the salespeople, and we look at scaling our team as part of our fundraise. We're very excited about this space. We're out to change the world. We think HR Tech needs to be reimagined. My name is Rick Beaton, CEO of Motis. It's been a pleasure. Uh-oh.
Thanks, Rick. Nice job. Welcome to the Wenatchee Valley.
Thank you.
I wonder if you would go into a little bit more about customer acquisition and long-term retention.
Delighted. We've built our customer acquisition, we've built a classic sort of lead-based model now, so our tech stack is using Seamless for lead generation. We've identified our ideal customer as firms that have over 150 potential users through, for this iteration, we're in version 2 of 2,000 users. And so we have lead gen using AI that selects within the industries we're looking for. We build campaigns. And we're getting actually really, really sort of solid feedback from that system. So our meetings set per month are, really substantial in that. The long-term value per customer, ADP claims 9 years, which seems really high, but it's HR Tech. It's not like B2C, where you're always having to renew the customer. So we're anticipating that our 3-year, 36-month long-term value per customer.
Okay, great. And who is your strongest competitor, and what differentiates your software from theirs?
There are 3 or 4. Lattice is entering our space. Plum.io, a Canadian company. There's another German company that's coming on. What really distinguishes us from them is very few of them actually have the ability to career path, attach skills to it, and curate that side of it. Most people in HR Tech are still, and forgive the critique, but there's a side of HR whenever I'm lecturing, I always go, I know you expect me to be the flaky one. And what we've tried to do is bring the best of cutting-edge university research into the field of how we build robust organizations. So what we're really interested in is developing these solid organizations that can achieve organizational results, that can also have a healthy ecosystem so that people can do great work and thrive and be sustainable in that sense. So there's this moral, sustainable mission that is a part of what Motis is trying to do, is to create these really cool work environments that can also attain the actual financial results that we want. And that really does make us different. When we have a dialogue, I can talk about neurodiversity, I can talk about neurobiology, I can talk about your social science systems, I can talk about sort of all these elements that are really should be part of the conversation, but they're not in organizations. And there's this, almost like this massive gulf between what we know and the way organizations actually function.
So let me take a different tack.
Yeah.
And can you describe to us your metrics for success in a given case and how you monitor those outcomes and then learn from the the cases where it doesn't succeed the way you expected?
No, that's very good. Thank you. It's funny. We beta tested our product for a year and a half in the wild, and right from the front end. One of the early clients that helped us build it was one of the top UX firms in North America, and when we were working together, we used our intellectual property, and they designed the software. And UX people, forgive me, but they tend to be very confident about what they build. And it's like, well, you can just take it off the shelf and you just give it to them. It'll work because we've designed it so beautifully and it's so intuitive. And I'm going, but it's a human system. I don't think it's going to work that way. So we tried it. And we gave it to them, and it didn't work. And what we learned really quickly is that the culture and the ecosystem of the organization, sort of the opinions and biases that we have about how we should take care of people, really shapes the use of the software. So with the software, we've incorporated a design based on what we know about people and built a UI, and the software will function that way. So we're really careful when we implement it. There's a whole orientation, if you will, and a socialization in how do you manage people, how do you lead people, how do you create this ecosystem. And then also the curation of the content is a really important part of that. We have regular check-ins with them afterwards. We're very careful about that and follow up. But so far, we've had great success with it. So having said that, the people over the boomers really struggle with it. The Gen X and younger and the millennials think it's the best thing since sliced bread. And that's just a different orientation about how we learn, how we think about what it means to be human. Yeah.
Well, as a boomer,
I was careful when I said that.
Can you describe how you're going to use the funds if you're successful in this competition? How would you use the funds to advance the growth of your company and accelerate your path to profitability?
Yeah, I mean, it's really clear for us. One is we need to build the marketing engine, the messaging, the brand, that part of it, and the advertising and that piece. The second part of it is our sales. We have the sales engine. It's replicable. We know how to do it now. We've spent 8 months working on it. Now we need to build that out. And then the third part is we're right on the verge. We have the designs and all the research and all the feedback. Version 2 that we're working with now is good to organizations about up to 5,000 employees. For us to scale for enterprise, which is the next push to get the real numbers, we need to build our version 3. So we're right on the verge of building that. So some of the funds will go to building version 3. So sales, marketing, and product development. That's it.
Fantastic.
Yeah.
Well, Belinda and I have a couple of extra questions that we didn't think we would get to.
Okay.
So, Belinda, do you want to take the one about the mobile integration?
Yeah. Will you need mobile integration for this product?
Yes. Yeah. And that's on the next build.
Okay.
Yeah.
All right.
Yeah.
And
in fact, we've already just to fill in the reason I say that so quickly is that we've already been receiving feedback on our current user base that they want mobile integration, particularly in a remote context. I mean, like a friend of mine, he was at Amazon, and all of a sudden his manager was in India, and he said, I just felt like I'd been cut off just because of the distance and the time and stuff like that. With our tool, it actually functions. You can continue to develop somebody from a distance. But with the new remote context, we realized that mobile and it really is essential to what we do. So all of our users are asking for it. So.
Okay, good.
I think we're getting close to time.
Okay.
And I would take this option to open up the audience questioning. If we have one question from the audience, we actually have time for such a thing. If I could actually see the people in the audience. Maybe you can see them better, Rick.
No.
Doesn't look like it.
All right. Well, thank you very much.
Thank you, Rick.
Thank you.
Hello, I'm Frank Kuntz. Mayor for the City of Wenatchee. The City of Wenatchee is proud to host the annual Flywheel Conference in our city. We're a region ready to support new businesses and to share the place we proudly call home. While we couldn't host all of you in person today, we're here and ready to welcome you and your businesses in the months to come. It is now my pleasure to invite the next company presenting in the Flywheel competition to the stage. Cognition Med, located right here in Wenatchee, Washington. Cognition Med created Coltrane, a mobile application for medical providers empowering patient-centered care with any colleague in any system at any time. Please welcome Dr. Gotham Niacc, CEO of Cognition Med, to the stage.
Hi, everybody. I'm Gotham Niacc. I'm a cardiologist here in Wenatchee, and I've been here for the past 12 years. And one thing I know is that we have the best rural healthcare system in the country. But I'm frustrated and I'm burnt out because I can't effectively collaborate with my colleagues in the region. I still carry a pager. I use a fax machine and get faxes. I get a barrage of text messages every day. And I type into an electronic medical record that doesn't seem to connect with any of the other hospitals in our region. It's super frustrating. And when I get a call from OMAC in the middle of the night to help a patient with an emergency, I don't need 5 or 6 bad ways to communicate. I just need one that works really well. And it turns out my colleague and best friend and co-founder, Sanjay Kicha, a cardiothoracic surgeon in Wichita, Kansas, had the exact same problem. We both realized that as rural medicine physicians, we are on an island, and nobody is coming in to help us solve our problem. And after both of us had a patient die because of our inability to effectively collaborate with our colleagues, we decided to solve this problem ourselves. We invested $150,000 of our own money and created Coltrane. Coltrane is a free, simple, secure mobile application. Any provider in any location at any time can connect with a colleague to discuss a patient's case. Think of it as if a group of medical providers were sitting around a conference room table discussing a patient, looking at the same data at the same time. Now take that concept, put it in the palm of your hand, and you have Coltrane. We're not a telemedicine company, and we're not connected to the electronic medical record. A few weeks after Coltrane was released into the App Store last year, a patient presented to the emergency room here in Wenatchee with a heart attack. Using Coltrane, we saved 15 minutes getting that patient's blocked artery open. For every minute we saved getting that patient's blocked artery open, we reduced his mortality by 1%. And for any of you that have a loved one with a heart condition, you know exactly what I'm talking about. Reducing somebody's chance of dying by 15% simply by getting providers to collaborate more effectively was a huge win for us, and it was awesome validation. It told us that Coltrane not only saves time, it saves lives. Our competition is just trying to do too much. We're not even sure what problem it is they're trying to solve. By going directly to providers with a free, simple solution, we have a huge advantage. We've even leapfrogged traditional messaging platforms because we're secure and we're patient-centered. Coltrane is in its own lane. After we released Coltrane into the App Store last year, we got 120 providers here in Washington and in Kansas to get on the platform and test it. And we learned a ton. And we've already started developing version 2.0, which we'll have ready for a national launch by early 2022. Look at these numbers. 1.5 million providers in the United States, $20 billion spent by the medical device and pharmaceutical industry on direct-to-provider advertising. That is a massive number. We are going to accrue users by a mix of word-of-mouth virality and both traditional and non-traditional forms of marketing. We've already started here in Washington and in Kansas, and we'll grow from there. We'll keep our users engaged by giving them a terrific clinical experience. We've started to embed natural language processing tools as we develop our second version of Coltrane, as well as audio and video capabilities. But where we'll truly unlock value is through the Coltrane Lounge. This is where we're going to channel some of that $20 billion industry spend. Providers will have the opportunity to opt into the lounge where they'll get data on how they work and think at the point of care. This is data they don't get in any other venue. We'll give them educational resources as well as a network of providers all around the country. But where we'll truly innovate is how we monetize. We'll have digital ads tailored to the individual specialty because that definitely drives revenue. But our true disruption is in the digital roundtables. This is the future of healthcare digital advertising. Providers consuming information from industry when they want it, how they want it, at a time that's convenient. It's non-intrusive and it's ethical. Gone are the days when a pharmaceutical rep comes to my office, brings me lunch, hands me a brochure. I need industry to give me their incredible educational resources because that makes me a better physician. And when I'm a better physician, my patients get better care. And when my patients get better care, both the pharmaceutical and medical device industry sell lots of product. Our monetization path is fairly straightforward. The digital ads are a pay-per-click revenue model. The roundtables are a recurring revenue model with reps and medical science liaisons. We'll start in the cardiovascular space because that's what Sanjay and I know really well, but we'll grow quickly from there. By 2025, we'll have 100,000 providers on the platform, 30 industry partners, and 3,000 reps. And in our models, that would yield a $53 million revenue. To exit, we'll have a number of viable options. Certainly big industry tech players that want to get into the healthcare space, incumbents in the healthcare space that want to expand their offerings, and then the medical device and pharmaceutical industry that may want to white label Coltrane for their own customers. If we meet our KPIs or exceed them, we'll definitely consider another round of fundraising and grow our company. Our team is outstanding. Wouldn't be here without them. Both Sanjay and I are both doctors. We understand that we need to have effective business and technical expertise to really grow the company. And with our team, we have just the right mix of clinical, business, and technical experience to disrupt this massive industry. I'm going to end with a story. Joel is a physician assistant here in Wenatchee who was one of our very first Coltrane users. He traveled to New York a few months ago to help in the pandemic at a really distressed hospital. When he got there, he had limited resources, and he realized that the health IT system there was terrible. He was there with a group of other providers from all around the country who had transplanted to New York for the week, and he got them all to use Coltrane. And during that week, they seamlessly collaborated, took amazing care of sick patients, and it showed that our product saved lives. This is exactly why Sanjay and I built Coltrane. To help providers better take care of patients, to help industry better collaborate with us, and in the process, make a lot of money. We are transforming healthcare, full stop. Get on the Coltrane.
Gotham, that was fantastic. Thank you very much. Let me ask you to comment a little bit further on the maintenance of HIPAA compliance and data security during sending this data back and forth with your mobile app phones, including both to physicians and then communicating with the patients.
Yeah, that's a great question. So this is provider to provider only, and every part of this was built on a foundation of security. So when we got this product kind of going in terms of the design, we started with security and then built up from there. And that is going to be our the way we do things going forward. It's all going to be based on a secure foundation, and then we'll move forward from there. And we're lucky because we have engineers that actually, well, we had an engineer that designed this platform that completely understood HIPAA security regulations and how to make this work for what we were trying to do.
Excellent. Belinda?
Yeah. Well, it looks like you have an outstanding technical team. And you mentioned digital marketing that you're going to be working on. But I'm wondering if you've thought about or if you think that you need a sales force and just how you would scale that, how large of a sales force you might need.
Yeah, I think, with the funding that we could get from Flywheel, our first step is to acquire engineers to continue to build. But the next two hires that we need to make are sales and marketing for someone who understands the pharma and medical device industry to help expand the marketing platform. And then the second hire is someone who really understands user acquisition for mobile platforms. Those are the two people that I think we're going to add next once we get our engineering finalized.
Fantastic, thank you. And just to follow up on that, tell us more about the marketing strategy. How do you get this known to people who are poorly connected, physicians in rural communities?
Yeah, I think that what we learned when we put the first version out, we did not market it to anybody. We were trying to really test our hypothesis. Does this solve the problem we're trying to solve? Mm-hmm. And we got 120 providers on it over the course of a few months pretty quickly, but it was really through word of mouth virality. That was the key, we felt like. But we know that if we're really going to take this nationally with a product that is going to work even better than our first version, we need to have somebody that understands how that digital marketing works. Our target demographic is probably going to be a provider between 25 and 50, we think, is the best kind of use case for this. And so we need to have somebody on board that understands how do we get this word out? What are the latest methods of marketing that are going to reach the rural reaches of Oroville or Republic, where there's doctors that are really, truly on an island. And they get a lot of locums doctors in those areas as well, and that's common throughout all rural America, where doctors come for a few weeks and then they go. So if they have a universal platform that they can collaborate on, it's a game changer for all of rural America. So that is going to be a huge key to our success, is getting to those providers.
Can I add that in marketing, the key is to use both traditional and non-traditional means of marketing. So traditional marketing, as Gotham said, virality, standard advertising. Non-traditional means of marketing for us, the pathways are already built. We can use our professional societies. We can use residency programs, medical students, medical schools. We can reach them because we already know how, and they can disseminate Coltrane. So we have built-in marketing pathways that we don't have to create ourselves.
Very helpful.
Yeah.
Yeah. And how do you intend to use the funds to hire employees and grow your business?
Yeah, so we're going to spend about 70% of it on engineering to start with, to get us to our next landmarks. But we are going to, at that point, also bring in really two marketing people. The one that we just talked about, the digital marketing to our target provider audience. But number two, we need somebody that understands the pharmaceutical and medical device industry inside and out. How do they work? What will work for them to create an environment in Coltrane that's going to be attractive for them to come in and try to educate us on their products? And so that person is probably going to be the most critical next hire after our engineers, because that's our monetization pathway.
Sorry, I'm writing new questions as we go.
Perfect.
The other question I wanted to ask was, you talked about marketing strategy. Let's talk about metrics for success. How are you going to track your success as you grow the company from where it is now, adding new employees? Are you going to need to hire a CEO, a different CEO, to expand the company to a much larger?
Yeah, we both believe in a hybrid model for us as physicians. So the key to growing the company is to have an operator that can grow a startup. We know that. Who that operator is going to be, if it's not going to be the two of us, we're going to hire someone to be the operator. We already think we have an internal person, which is Anil Ramjani. He's our business lead. He would be a great operator, and he's interested in being our operator. If he isn't the right guy, we'll get an external person. So we believe that a hybrid model for us is what works, because as clinicians, we need to remain in the practice of clinical medicine to develop the product the way it needs to be developed as it evolves. And that's really our strength, is that we're developing a product for ourselves as the customer. So we're going to do both.
I was just going to ask about the lounge again, if you can tell us a little bit more about that. And that sounds like the area that's going to be your revenue maker. You could tell us a little bit more about that.
Yeah, it's really what we have come to realize is that industry has a huge role in how we practice medicine, and that may not be known to the average person. For example, if Sanjay is going to do a very technical valve surgery, he needs to have an industry rep right there in the operating room helping him, because that person is the product expert. So if they get into the operation and they need something different, that person is there because they know their product. So if you take a step backward and say, okay, well, he needs that person hand in glove, if he has a much easier mechanism to communicate with that person, collaborate with them over time, he's going to be a much more effective physician. Similarly, on the pharmaceutical side, as a cardiologist, I rely a lot on our pharmaceutical reps and their medical science liaisons for education, but also to help me get patients the medications they need. There's all kinds of drug assistance programs and things that these folks are the experts on. So if I have a problem and I need to get my patient a medication that they can't afford, the pharmaceutical reps actually have an easy pathway to help me that. So having those connections is hugely valuable for education from a medical perspective, but it's hugely valuable for our patients because they do so much to help patient care.
Here's the thing, too. For us, the key is that the industry that can help us will be there at the point of care, not when we're out to dinner, not when we're at a conference away from our practice or our hospital, when we're looking at an exhibition booth. We will be able to use them when we need them. And I think that makes the real difference in how industry can move product the right way and how we can use product the right way for our patients. That's the difference.
Yeah, that's great. Well, gentlemen, I think we're out of time. But
Okay.
Thank you very much.
Thank you very much. Yeah,
Thank you.
Yeah.
Thank you.
I am J.C. Baldwin. On behalf of the Chelan-Douglas Regional Port Authority, I am honored to help congratulate all of the companies presenting today. The Regional Port Authority is the principal economic development agency for Chelan and Douglas counties. We measure our success in terms of our ability to create living wage jobs, stimulate private sector investment, and by enhancing the economic well-being of families in our communities. From the very beginning, we have supported the Flywheel Investment Conference because we believe in supporting entrepreneurs and opening up resources to capital. If you are an entrepreneur watching this conference today, we encourage you to visit us and let the Port Authority know how we can support your growth. We have technology incubator space available to lease, as well as commercial properties to sell. I am honored to introduce Max Martina, President of Cambridge Leadership Associates, who will be moderating the next panel discussion on adaptive leadership. Max works internationally to support teams and leaders scaling their organizations. He brings nearly 2 decades worth of corporate management and startup business experience. Max studied leadership at Georgetown University and earned an MPA at Harvard's Kennedy School. Please welcome Max Martina and panelists James Dorsey, Virginia Emery, and Martha Montoya to the stage.
Thanks, JC, and good afternoon to all of you in the live audience, as well as to those of you that are gathered perhaps around the world tuning into today's Flywheel Conference. It's truly an honor and a privilege to have the opportunity to work with CEOs and senior executives from all walks of life in multiple industries. And as part of my role as president of Cambridge Leadership Associates, I have the distinct opportunity and privilege to help those individuals scale their enterprises. Today is no exception. We are gathered here today to listen to some of the wisdom and insights from 3 particularly special folks where we're going to talk a little bit about leadership today. So we'll have an informal conversation. For those of you that want to follow along and learn about the folks that have gathered here, you can take a look on page 15 for more complete bio information. I'd like to start with a couple brief introductions. We'll start here with Virginia Emery. Virginia is the CEO of Beta Hatch, a 2019 Flywheel Award winner, so we're happy to have her back to the remote stage where she can report on her progress. Virginia received her PhD in entomology from UC Berkeley. She is, as the CEO of Beta Hatch, industrializing the production of insects for animal food, particularly mealworms. You can tell us more about that. Right now she's in the midst of a pretty significant production expansion, so we welcome her here today. Virginia, I'd love to have you tell us a little bit about the progress that you've experienced since winning the first Flywheel Award in 2019.
Yeah, we have had pretty rapid growth of the business and our capacity. We've been really supply limited from day one because there are no bug factories for us to outsource to. We have to build them, and we're doing that right here in Kashmir, Washington. We raised a Series A investment round last year, which was part of the Flywheel investment was part of that. So that funding's allowed us to build this large factory. It's about 40,000 square feet in an old juice factory in Kashmir. So in the midst of construction madness, which we're really excited this summer to bring that online.
Yeah, you told me before that you're also a black belt in Taekwondo, and I know that that's not maybe so current, but it's interesting in the context of leadership that we'll begin to talk about a little later. Give us a little bit more of a trajectory on the company. So 2019 to today, obviously expansion, growth. What do you see the market looking like, and how has production shaped the company?
Yeah, we're serving a variety of different agricultural markets, and anytime you're working in food and agricultural production, the markets are enormous, and there's so much opportunity, and one of the things that we're really focused on is alternative proteins and high quality ingredients where we have more stability in the supply chain. So this year especially has highlighted a lot of the disruptions of different supply chains, both from managing people and also managing climate. And what we do helps to buffer producers from those volatilities because we have year-round production. It's very predictable. Everything's controlled. So we're in the middle of planning several expansions around the country. We're hoping to make some announcements this year about some other operations in different parts of the country, and really just trying to meet that demand. We've got well over 50 times more demand than we can currently supply out of this facility in Kashmir. So we have a lot of opportunity to expand. So I think it'll be a very exciting 21-22 year for us.
Great, in more ways than one, and we'll come back to you in a second here. Let me also introduce Martha Montoya, our second speaker today. She is our 2020 Flywheel Award winner, so 1 year ago, I think today, where you won the award. What a year. That session, of course, was not in person as well. Martha is the face of Ag Tools, a SaaS platform that's designed to deliver real-time data to farmers and buyers in the supply chain to create efficiencies, right, in that transfer of product. I think you just told me as well that the U.S. government also solicited your company for some input on essential data, right? You've had 25 years in the agriculture sector. Love to have you share a little bit about the progress that you've experienced over the last year. Been a tough year or a good year?
It's been a very good year. In fact, I'm wearing my same jacket of last year because it was good luck.
Great, great.
It is, I remember when we used to present in 2019 or before, we're a supply chain solution, and people would look at, like, what is supply chain? Yeah. And then came COVID-19 and the toilet paper issue, and everybody understood supply chain very fast. And it was like, oh my gosh, finally people understand supply chain, which is logistics, really, throughout the world. So it has been a growth because precisely that's the disruption happened. So everybody knew what the consumer wanted, but they didn't know when they will get it. And that's where we are the strongest on the data, to understand, as I tell everybody, everything that you wear, eat, everything comes from nature in some shape or form. So excellent growth.
So Virginia, you're early stage revenue, and I presume you're also early stage revenue growing. How does growth look? What are your projections going forward?
Well, the one thing that we did do right after we got our investors on board last year, take a little bit of breath, slow down, and strategize. What should we do that we wouldn't do normally? Normally you would go after like 10 customers, 20 customers, 100 customers, 500 customers. And so we stepped back and we said, let's go after multi-year, multinational companies, because that's a curve. And we saw the corporations looking for solutions fast. So let's take advantage of that little window of opportunity where large corporations are looking for, let's try whatever at this point. So that was the different way. If you would have asked a year ago, it was like, let's go after more farmers versus now going after large contracts. Even countries, we have a couple countries as customers per se, because everybody's wondering what is going to happen. So that's the growth that we
And that was a direct shift of COVID?
So we direct shift of COVID.
An adaptation to the current market forces.
Yeah. Instead of going farmer by farmer, because part of the job was visiting farmers, and farmers were busy just shipping, trying to survive.
So did you have to travel during the pandemic?
No.
No? Okay.
Zero travel, because it was corporate travel. Right. I mean, corporate accounts.
Right. Great. Good. Well, we'll come back to that. One of the things we'd like to talk about as well is the challenge of COVID. Before we think forward, we'll look back to move forward. Before we go there, James Dorsey, I'd like to introduce you as well. A Queen Anne, Seattle resident, although you've just gotten back from Brazil. And I think you swooped in last night to meet with Senator Murray. James is the CEO of the College Success Foundation, which is a national educational organization dedicated to eliminating the opportunity gap for underserved first-generation low-income students. If I'm not mistaken, you've helped over 10,000 kids
per year, annually.
Education.
Yes.
Yeah, excellent. College education. You serve on Governor Inslee's STEM and Education Committee, Innovation Alliance, the Washington STEM Board of Directors. You've served in the past for the Washington State Laser Program, Leadership and Assistance for Science Education. It goes on and on. You've done so much at this intersection between STEM education, right, and how that funnel or pipeline supports private enterprise. Tell us a little bit about your work over the last year and how things have changed.
Interesting. I think it's changed a lot because for 35 years I was really STEM specific in the day job in terms of building a pipeline for the workforce in STEM, and doing that in collaboration with higher education entities like the universities and community colleges. And that's a long-term process. It's a very narrow window, and really trying to produce engineers and scientists. The last 2 years, I've taken a broader look at things now. I'm looking at the talent pool and the skills that the talent pool needs to have for a workforce that's going to be predominantly need to have STEM skills. and not just have that STEM intentionality, but they're going to go into higher education or have some career connections that they need to have early on. What does that look like for the broader pool and ensuring that there's relevance? So I think that's the bigger change for me, is that I'm working with populations now that aren't readily thinking, I want to be an engineer or scientist, or I have math aptitude or science skills or creativity in a different way. All the talent out there is possible.
Yeah.
And all the students should have that opportunity. So I think that's the new approach that I've been involved in, and kind of merging a lot of what we've learned in our research and our work in the STEM world and bringing that into the broader general student population, I would say, and say these are some of the levers that work for young people. These are the levers that give them a sense of ownership, sense of belonging, understanding, and recognizing that I have skills and ability to be whatever I want to be, and get to that early. And so there's a connectivity and a relevance early. And I think getting that out to the broader student population in the community, I think is going to be needed, particularly here in this region as well as nationally.
You had mentioned to me earlier before, I think that you said something like 70% of all new jobs in the state of Washington will be STEM related.
Right, you're gonna have to have some tactical skills and some computer-based skills and knowledge and background. And a lot of these young people do, because they're gaming constantly. So if you look at industries now, they try to design all their technology and their tools that are designed comfortably for our young people. So you have your son or daughter, and they're playing with games at 4 or 5 or 6 or 7. They'll be using that for their, and 30 years from now for work.
My 13-year-old daughter started doing computer programming courses, something that I never did, as a 13-year-old. So we're seeing that shift across curriculum, I think. Let's get back to that in terms of the intersection of education in terms of talent pipeline. But before we do that, the year of COVID, the year and 2 months of COVID, let's talk specifically about how that's impacted not only your business specifically, but the broader market for what you do in the world. Who wants to take that?
I will jump since I already started talking a little bit. I think it's interesting for us because programs that we have, we're in schools every day, 5 days a week with the students, and suddenly we had to go virtual. Luckily, we were doing some research in that work, and so we went to a hybrid and virtual approach. The thing that I can appreciate are some of the interventions and services and supports that didn't work 5-10 years ago because it required technological engagement or teachers to be engaged with technology and were resistant to it. It didn't happen, but now it was required. The teachers have almost forced to be engaged with the technology and the tools, and to come up with more creative ways to engage young people on a virtual platform. And so there will be more virtual platform moving forward. The governors also, we rolled out some projects during COVID in terms of project-based enrichment activities for young people. And to see that happen on a virtual stage, before it always was, let's get the kits in the young people's hands and we work with them. Now it can happen virtually, and now we can see the proof.
Yeah, and you're delivering that virtually as well?
Right. Okay. So that is, I think the big change is a lot more supports and services will be delivered on a virtual platform, and instruction will be delivered on a virtual platform.
Great.
And for us, the challenge was some of us, including myself, are not technology driven, or we're not. Mm-hmm. So how do you train your brain fast? That was one. And many of my team members, seasoned business experience, industry knowledgeable, but not technology driven. Okay. Mm-hmm. And then the young ones, technology driven, not industry driven. So I think the common denominator that we finally found is, and my team knows this, is common sense. That's really, we get people who have common sense and can solve problems. Problem solving. Because then you can teach everything else. And so that has been the mantra in the last 3-5 months, hiring the people that have those skills and that are not afraid of learning, because many of our mature, seasoned business industry need to know that we have to now teach ourselves every week something.
Yeah, tremendous. How about you?
Yeah, our experience was very intense in the beginning because we're an operating business.
Right.
So we had no idea what was going to be happening. I had to sort of plan for all contingencies. We actually ramped down some of our biology so that we had less requirement for in-person work. But we had to have someone there to help maintain our insects and keep the farm going. So we had to do a lot of adaptation very quickly. My team was extremely adaptable in this time and very flexible, and I think everyone learned a lot of great skills in resilience and sort of being able to figure things out quickly. Being a fast learner and fast problem solver is a big piece of what we look for when we hire for our team. But overall, I think, if you asked me this time last year, I would have been running around like a crazy person trying to put out fires. But we actually developed a lot of good frameworks for collaborative work, for remote work, for prioritizing, because when you have to sort of identify what are the most important things to focus on when you have these disruptions happening. But it's been actually a very good year for us. We've had a lot of success in attracting new customers because their existing suppliers have had a lot of disruption that our business is buffered against. Our model, which is a more distributed approach, has really been validated. A lot of centralized production faced huge challenges. We saw this in the meat industry, for example. And so smaller, more distributed operations, I think we're understanding that that could actually be a lot more resilient to we've seen everything from, Texas power outages and that kind of impact on different supply chains and industries to obviously pandemic-related disruption. I think it's all sort of reaffirmed our thesis in how we produce and how we're operating.
One of the interesting things that Brian, I think in the last panel, mentioned is the curiosity that he had around raising money during a down cycle. You are one of the few that was able to close, in your case, $9 million of funding during the pandemic. Talk about the challenges of that and maybe how you had to shift your perspective to do that well.
Yeah, we had an active round that we were on track to close when all the pandemic things started to happen. So we had to kind of readjust our expectations, and we split our round into a first close in May and a second close in the fall that gave us some breathing room to strategize and plan and navigate everything that was happening. But it was actually a really interesting time to raise capital because we could connect more readily with a lot of people in far-flung places. We have some international investors. We were able to connect with people on the East Coast really easily. Just sort of more fluidity of interaction than you sometimes get with a very person-to-person driven type of relationship. But we built a lot of relationships. We secured a lot of capital without needing to meet in person. And I'm hoping that model continues to be something that is embraced because it does I think help level the playing field. We're rural here in Kashmir, so some of our investors have a rural focus, which is fantastic. But obviously, a lot of the capital is in cities. Yeah. And so, in 2019, I took well over 50 trips to meet people and network and talk to investors and customers. In-person trips. Obviously, didn't get on a single flight in 2020, but was still able to be very successful. So I'm hoping that continues because it gives more access to different types of founders in different communities, people who have families and can't travel as easily. I'm pregnant right now, and no one would know. No one would know.
That's right.
And so there's things like that can help eliminate some of the biases that we see in the financing sector.
Yeah, great. Before we talk a little bit about talent pipeline, I'd like to ask you to put on your operator hats, of which you both are. All three of you are, and I think all four of us have been either current or former CEOs. At a very general level, being a CEO is a difficult job. It's a painful job, right? So for those of us that have not had that experience running a company, starting a company, founding a company, it's unimaginable, frankly, the amount of pain and torture that sometimes the experience of doing this feels like. How do you, maybe more of an interpersonal question, but how have you dealt with the stresses, not just necessarily during a pandemic, but throughout your tenure as a CEO of a company?
Well, it came the time that I was literally desk to bed, bed to desk,
Yeah.
literally. I mean, that
Not,
was
not just working in bed.
no, that one I didn't do. My neck would have been hurt. But it was literally like that. And one day I was like, wait a minute, hang in there. I think I'm overdoing it. I would say there are two things. Another issue that you presented about the investment world, how it changed. The investors should look at this as an advantage because we can dedicate more time to the business instead of running around fundraising. And that helped us, for example, because we created more systems in place. I dedicate more time to the team members that normally, like even this trip, you neglect a little bit because you're on roads and trips and all that stuff. So it's important. But I would say the most important one for me was the fact that I could enjoy my family more. And that helps a lot. I mean, that really helps a lot. Because you go on that trip and you get on the road and you say, this is for my family, this is for my team members, and you do it. But when you're near the house and you can actually walk in the afternoon with your daughter, or you can have dinner with her or with your husband, it does make a huge difference. And so hopefully the investors that are listening will understand that it's good for an investment.
Good, well said. And of course, the statistics of first-time CEOs and startups is that the majority of them fail, right? So we may be the exceptions here in the sense that you've gotten really solid funding and you're scaling programs and services. The pain of being a CEO, James. Well, of course, you just got back from Brazil. So.
That's a long answer. That was still painful. No, that was nice. But I have to say that it's the pivot to understanding that you really have to be a strong listener.
Great.
And I really had to emphasize greater amount of time listening and also communicating, because I think both of those happening in a deeper way helped us problem solve. And if I can't problem solve by myself for the pandemic, for the inequities in the world, those two big things were out there, and my staff was affected, the community was affected. How are we going to continue to work? How are we going to continue to serve? I think those were two big things. I think the other thing is you get innovation. There's new innovations that come up. So, of course, the technology pulled into a program that's a direct person-to-face program, all of a sudden you need new tools. So I think we got creative about innovation. I think that was helpful. And I'm not going to say that was me. I think it's a team, having a good team around you. Sure. I think is important, and it's tough for somebody who's starting up. Like, do I have my, my starting lineup around me, and I have my point guard and my, rebounders? You got to have all of that. I was listening to the other conversations about my marketing team and you got to have that in place, and we were fortunate to have everything in place, and we had enough resources and capacity to sustain during the COVID, which not everyone does. Right. And so I think that's because we had some longevity. We've been around for 20 years, so there's some backup there that we were fortunate to continue to persist. But you have to have that room for the innovation. And I think that was key for us, is to make some pivots and then to understand what are the new needs that our population is going to have under these circumstances, and will that be short term or will that be long term? Because if those needs you plug in and it's going to be a long term pivot, what's that cost in the long game for the organization? Yeah. So that's I think that's the stressor, because we've had to make some new investments that we're going to have to deal with, because now our technology's got to be faster, stronger. More people have to have it in their hands, and it has to be upgraded, improved, and the students have to have it. So all of those things have been big, and it's also shed a light on inequities that are out there in education. So there are a lot of young people that don't have MiFis in technology, and we're in the rural sectors. How are you going to make sure they get it? Right. So there's a lot out there that's not all on our organization, because I think it's shining light. Right, it's systemic. Yep. So I think that's been interesting, but we could see it firsthand, and it's also helped us, our message that we were leaning on and what we're about in terms of equity in education and equity in the workforce, and to try to ensure that all students have an opportunity. That light was shined on the whole world, if not the entire country. And so the necessity of our function is central, versus it was on the peripheral. There were peripheral investments, and now the state or our partners are like, this is key, this is core. So it wasn't much of I'm not going to say it wasn't much of a challenge, but I would say the interesting challenge that I recognize is that we started getting investments in places and spaces we did not consider before.
Interesting.
And so that's, I think that's, I don't know how will that go on in the future, but it's very interesting to us.
Well, thank you for sharing that piece too about the essential nature of building teams. If we think of leadership as facilitating the collective success of our teams, and having those strong teams in place to respond to the change becomes essential. Leadership pain.
Well, it's interesting that I was going to mention this idea of the team because it is a lonely job at the top. You know, they say that all the time. You know, being a CEO is lonely because you do have to sort of take on all the uncertainties and stresses and risks in your business, and then filter that out for your team so that, you know, it's not their job to panic. It's not their job to worry about those things. Right. So, you know, you have to be transparent and honest about what's happening, but in a way that helps to keep them focused on what they need to do. Yeah. And so with my team, I actually feel like I learned a lot better delegation this year. You know, recognizing where I was the bottleneck and trying to remove that bottleneck as much as possible, because if you want to build a scalable business, there's no single person at the business who should be essential or bottleneck, or you won't be able to grow and scale. And so we have done a lot of systems investments, taking things into more scalable processes. We hired a lot of talent this year. I think we were maybe a dozen at the beginning of 2020, wow. And now we're 23. So we were able to recruit a lot of great people to the team and some new leadership as well. The new sort of remote approach opened up a lot of our ability to recruit as well. We have some team members in other states, and that has been facilitated this year. And I think, you know, throughout the pandemic, I've tried to, with my team, you know, also recognize that you're hiring the whole person, and that people have, you know, stressors, especially this year I've had stressors that are completely unrelated to work, but they may impact their performance at work, and finding ways to support that as best as you can, and recognize that. And, you know, it has been a good year for, you know, strengthening the family bonds that support your work. We built a great garden. That was our project.
These things are important, right?
Absolutely. And, you know, you kind of get blended when you're a CEO. So I had a great garden, and I grew 50 different jalapeno plants in a little growth trial with our fertilizer product.
Great.
We have a lot of great stuffed jalapenos. We have lots of, we test recipes.
You're curious and experimenting even when the chances are difficult. So.
But, you know, doing, just sort of recognizing that I think everyone this year has really come to recognize how important work-life balance and sort of the blurring of those lines is becoming as technology is part of our whole life. Yeah. And I think we're getting a little better at managing that.
Okay. I want to talk about two more central topics. The first is looking forward. Biggest obstacles that you think your organization will face in the next, say, 24 months. When you look ahead, what shines as the potential hurdles that you're going to have to encounter as a leader of your organization? Who wants to go first?
I'll go first. We're bringing a new facility online,
right.
So
40,000 square feet.
We don't know what we don't know. Okay. There's a lot that we are going through a process already of bringing equipment online, bringing new people to the team and training them, and we're learning all of these important lessons as quickly as possible. For us, it's actually a question of trying to keep up with the customer demand and the opportunity. We have a crop that can grow exponentially, and we have a lot of control over. And so there's so much exciting opportunity. It's really about making sure we have the right systems in place to manage those projects. You know, we have sort of a line of sight to at least 3 or 4 other projects in the next 6 to 12 months. Yeah. And being able to manage a team on a not just statewide basis, but, you know, a national basis, and being able to also just prioritize. Those are all things that I think are going to be really important.
So rate of scale as well, not just to scale for scale's sake,
yes.
But in a prioritized way.
Yeah, and we have a unique opportunity right now to really throw some gas on the fire. And so I'm trying to make sure that everyone's on board for what's coming. It's going to be very exciting. But we need to make sure we have the scalable systems, we have the right mentality, we have the right support, and that we're able to not disappoint any of our customers as we grow.
Yeah, great. Ford.
I would say for us, I have learned through this whole year, because we made sure we got into every incubator that accepted us. And I will suggest that really strongly to any startup, because it molds you. Every time you have to write that incubator, accelerator plan, it makes you think again what you're doing. So it forces you to keep thinking, am I going in the right path? I mean, my team knows that I do 2-3 per week, literally. It's like a competition, I say. It's like you practice and you practice and you practice until you figure out your business. So if you look at our path of last year, I think we were like in 12 of them in between different forms, and whether it's the Techstars or the plug and play or the Majiras or whatever, because it kept making us all think, me, the team, what are we here for? So that would be my first suggestion for a startup. Then within that, you start finding these beautiful mentors that are the leaders of industries, and that you would not have access to them unless you were in these programs. And I love it because now we have the top of the top in the world. And I can pick up the phone and ask for help and advice, and they are so kind that they're there for us, all of them. So that's the second thing that I say. And so for the growth, we build that for the growth. Then make sure that we have enough team members or advisory boards or anything that can help us move forward, and even finding advisors for my team members. Because I don't have all the time to get all the data. But for example, my financing team got 2 or 3 of the best Techstars financiers from Cargill that manage the CFOs of the whole Cargill company. So our whole model is based on that and getting all those times. So I would say we work heavily, or I work heavily on bringing mentors, and myself mentors for the next 2-3 years, because we don't know what we don't know. Like you said, very true. So I would say those are the things that I recommend.
So great. And so then in terms of the actual obstacles, part of what you're saying is recruiting talent, grooming talent, cultivating your team, and continuing to facilitate.
And bring them mentors to grow them with us.
Yeah,
yes,
great.
Very important.
Wonderful. James,
you touched on
obstacles. Some of yours are more systemic. More
right. I think it's interesting. I think the biggest challenge I see moving forward was an opportunity that we worked on, and it wasn't happening over the years, not with my current past, with the state. And it's really our career readiness, career connected work that we do along the educational pathway, which involves industry engagement and volunteer engagement. Those models are haphazard, and right now the demand for that engagement from the industry standpoint is massive. Yeah. And we don't have the capacity to manage it. We really like to have, have models of entry now with this technology, and we're in entry and intersections, and it differs for large industries, small industries, startups don't have all the time in the world to sit around and let my staff go volunteer at the school 10 hours a day or something along those lines. So that is, I think, our challenge, the wave that we're feeling. Like, we could manage Microsoft and Amazon, and they have big systems to do that, but once you start T-Mobile and rolling out, everyone's coming in with a different desire of entry. I think that's where we're trying to solve that problem for our students, for our staff to manage that there's some coherence in how that's going to work, and everyone's going to try to roll that out from an industry standpoint, from their elevation, their capacity, their mission, and they're all different. And so when you're intersecting with K through 12 institution or higher ed institution or programs within those, it's all over the map. And right now everyone recognizes a cultural shift in society, and so there's a lot of proactiveness for this. So there's not a need to recruit folks to come do that now. Now it's a need to manage them. And so that's the billion-dollar challenge that I think we have in Washington and where we have in the nation. I think
literally generating capacity.
Right, having the capacity, even in rural settings, yeah. and folks start to understand it's a variety of career paths and opportunities. How do we manage that effectively?
So let's distill this down to the pragmatic. If I'm here in Wenatchee or listening around the world, and I'm a high school student or even a college student, what would your message be to me, thinking about tech careers and talent development?
Well, yeah, I think there's a process. It's the awareness and engagement piece. So we really are you aware? What's the realistic sense of what it's going to be? We want to get them to have that realistic sense of what it is, and that generally is engaging with someone that's in that industry, volunteers or mentors or shadow programs or tours. That type of thing gives a young person a sense of, wow, that's something I like to do. Now, what's my educational trajectory that I need to take to get there? And I may not take that entire trajectory. I may spin off and take another path. So I think the message is there are multiple pathways to a desired career that you want to take. And as you know, as a young person, you can change. I was going to be a fireman my first day in school, and that changes. But you want to give them a palette that they can take multiple pathways. Great. And that there's a subset of skills out there now, and we talked about it earlier. There's skill sets that they used to call soft skills, but those are the core skills that these young people need to have, and a lot of them have. And they need to emphasize that and understand that's going to be the emphasis of how I'm going to survive in a work setting. That's how I'm going to start my own business. That messaging has not made it through the education system.
In other words, we're still looking at the hard skills, science, technology, engineering.
Right. You've got to have math. You got to have science. And I just focus on that, but I'm not focused on communication skills. I'm not focused on working in a team. I'm not working.
I think Dave talked about it. He said, he said relational skill sets, not transactional skill sets.
Exactly.
Right? So even as CEOs and founders, right, deploying those skill sets become critical.
And in my case, in our case, and I will always insist this. I told my kids, one of my son, my one son, not my one, the only son I have actually. I promise you, Benjamin. He's working in Congress. He doesn't make lots of money, but he's happy. Yeah. So, changing the world. The new generations are looking to impact the world.
Yeah.
And that is who we recruit, those who want to take care of our farmers.
Yeah.
I mean, we have multinational, but they're the ones impacting our farmers. How do we work that? So that's on the young generation. On the older and baby boomers, we now get it that we have to live a better world.
Yeah.
So we could work for anybody, but are we impacting the world? So our mantra throughout the company is we're here for the farmer. And if we're not here for the farmer, might as well not work here.
So that hybrid of aspirational versus execution pragmatic.
Yes.
I mean, I think mission-driven businesses are, the mission is really important to a lot of people when they're looking for a career, when they're looking for work that means something to them. At my company, I know everyone shares that passion for the sustainability element of what we can have an impact on, rural economic development, revolution of supply chains. There's all these things that really drive the team. And as a leader, it's your job to paint that picture for them. So even though, a bunch of people on my team literally shovel frass, which for...
tell us what frass is.
Frass is insect manure, so literally shoveling the shit every day. And it's a really dirty, tough job. Yeah. But the thing that I think keeps everyone working through that and smiling is that they know, hey, this product's going to get to a farmer and help them have a better yield. Yep. And what we're doing is building a company that has this potential to really impact the whole system. And here's these ways that what I do supports the development of our technology. And so being able to allow everyone on the team, no matter what they're working on, to see the connections with other people on the team, and then the broader impact in, not just the company, but the community and sort of the bigger world too.
Which as CEOs is, of course, part of your work to cultivate that vision, right?
Yes.
Create that inspiration. Tell us just briefly, talent pipeline. What does it look like for you? Is it hard to recruit and find the right talent, even for you, James, in terms of the nonprofit world and the advocacy work that you do?
Well, my job is to develop that pipeline. Yeah. So it's having an understanding of what the demand's going to be in the future, 10, 15 years from now, and helping the young people have a sense of that relevance. That's what you were talking about, even on the job, is that for a young person, they have to get, is it relevant to me? Is it at the local level? Is it in my backyard? Is it affecting my friends? Is it affecting my community? I think that is key, and just keep them on that trajectory. And that's really important in exposing them to a variety of opportunities that will deepen their engagement, their interest, and wanting to do more. So I think that will continue. That work will continue. And the other element is industry. If I'm speaking to industry or agencies or those who are looking for that talent, it's And the bigger challenge over my 37 years has been you're not going to get it so easily if you're only going to try to get the talent at the end of the pipeline versus helping to cultivate or to, as you do, really grow that.
Like Techstars and Microsoft.
Right, exactly. Start early and help build it. You're helping the pool in the future, 10 years from now. I know you need the talent. It's a long game, but you got to help in that long game, and it will ultimately come back to you. Right, pay dividends.
Just briefly, Judy, we have a few seconds left. Talent pipeline.
For us, the challenge is going to be the large companies who are starting to now recruit more.
Yes.
And so they bring a much more amount of benefits across. And so that is the challenge because there's a need of all these team members. Yeah. So we have to concentrate on rural USA and do what you have said, mentor them from the beginning and keep them with us, understanding that they're going to have a cycle to move on.
Yeah. Great. Thank you, Martha.
I think for us, it's been a process of finding a good culture fit too. We have, startups are not for everyone. That is very clear. There are some people, it's just not going to be a comfortable working environment for them, and that's totally okay. There's plenty of other types of companies and work out there. So we kind of find the diamonds in the rough, or the unicorns in the field, whatever you want to call them. These people who have a good set of hard skills, great communication and some of the soft sort of people skills, good EQ and emotional intelligence, but then also the right work approach, which is very fast-paced, very problem-solving oriented, able to make rapid shifts and flexible. Yeah. And that culture fit is a really important part of recruiting, and we've been very successful in finding some good talent.
Great, wonderful. Well, many thanks to each of you for joining us today, and we really appreciate sharing your insights. Please help us thank them as well in the live audience, and with that, we'll send it back to the main stage. Thank you.
Hello, Flywheel Conference attendees. My name is Julie Norton, and I'm an attorney with Ogden Murphy Wallace in Wenatchee. We've been eagerly waiting for today as each of these companies compete for the chance to win the Flywheel Conference. With offices located in Seattle and Wenatchee, Ogden Murphy Wallace has been providing practical, cost-effective legal services to businesses, municipal entities, and individuals in North Central Washington and throughout the Pacific Northwest for over 100 years. In these challenging times, it's even more important that we encourage and support the efforts of entrepreneurs, startups, and small businesses. I invite you to connect with our office through our website, on LinkedIn, or by visiting either of our Seattle and Wenatchee locations. I have the privilege of now introducing the next company in the Flywheel competition, SyncFloor from Seattle, Washington. SyncFloor enables businesses of all kinds to use music everywhere by aggregating content from the world's best independent catalogs and creating a streamlined discovery and licensing experience via their proprietary technology. Now presenting on behalf of SyncFloor is CEO Kurt DeBeek. The investors on stage for follow-up questions for the next two company pitches are Karen Rutherford and Minda Bruce. Please join me in welcoming both our investors and SyncFloor to the Flywheel stage.
Good afternoon, everybody. I'm Kurt DeBeek, and I'm the CEO and CTO of SyncFloor. Music is at the heart of the modern digital experience. From fitness to gaming, advertising to podcasting, it inspires creatives and helps bring new stories to life. Sadly, the process of finding, curating, and acquiring the rights to use music for businesses and creators is incredibly broken, with fragmented discovery and manual, time-consuming workflows. SyncFloor is here to fix all that. We feel that it should be different, and we want to enable businesses and creators to use music everywhere. As a founding team, we were made for this mission. Sejan and I combine deep expertise in tech and IP with years of experience in the music business. Running a music label gave us empathy and insight into the fast-growing independent music sector, a sector that we love, that combines high-quality commercial music with the flexibility to accommodate new ways of thinking. Great founder market fit to take on a big problem. So let me introduce you to Chris. Chris is the COO of The Class, a modern digital fitness business with tens of thousands of subscribers around the world. Chris, for the life of him, can't figure out how to find a proper solution to deliver a great experience that includes music for his business. Sourcing great music directly impacts their ability to deliver a world-class experience. Chris has money, and he wants to give it to someone. He wants to just put it in the machine and get great music. And for the life of him, he can't figure out a proper solution. Well, why is it so hard? Right? Why is Chris, the voice of the customer, the voice of opportunity for us? Right? Why is it so hard for him to get access to the music that he needs, the quality music that he needs? Well, first, Chris has to figure out what set of arcane music rights his business and his experience is stepping on. He shouldn't have to do that. Then, if he figures that out, he has to find out who can grant him those rights. And usually, it's multiple entities with differing agendas. He shouldn't have to do that. Finally, he has to figure out a platform to ingest and deliver the music as part of his experience. Again, all outside of the core of what he cares about doing, running a fitness business. If he gets it wrong, then there's a lot of pain. And that's no way to run a business. But that's the voice of opportunity for us, that voice of the customer. And Chris is not alone. Across many sectors, many businesses, we see the same version of the same problem over and over again. How do I get great music to incorporate into my business, delivered in a safe, simple, effective way, with affordable pricing, real-time licensing? That is the voice of opportunity, and that voice of opportunity is a cacophony, and it's really big. 12 billion plus and growing, with fast-growing segments like fitness and gaming and podcasting. With our independent focus, we believe that 40% of that is our service addressable market, 4.8 billion and growing. With an ambition to take 20% share of market, we believe we can be a billion plus GMV company. That is opportunity. So how do we go after it? First, you have to turn this thing on its head. And what we've found is a vein of gold running through the industry, which is independent music, high-quality independent music with consolidated rights. And we found a way to aggregate that music under a single platform, our platform. We've turned the licensing regime on its head in that we map the license types directly to the types of usage that matters to our customers. We have a fitness micro-license. We have a license that's specific to podcasters. We connect that all with a platform that encompasses ingestion of music, understanding of music, patented discovery for music, great, simple, hassle-free licensing. And that's the SyncFloor platform. And that's what enables websites, enables apps and services to get what they need and focus on what their business is. That's SyncFloor. So what we do is we show them this kind of experience. And I don't have time to do a demo today, but I want to tell you about some of the cool things that we enable. You can give us sentiment and references and get real-time results from our search engine using our patented discovery system. Saying shake your body at a bouncy, delightful dance hall party, right, with something like Drake and Rihanna, you get real-time results with music that has that vibe. You can't do that anywhere else. Once you get the music, you can curate it with our simple interfaces and deliver the experience that you want to deliver for your customers. When we've brought on pilot customers, and we've seen strong signal, especially in the fitness realm, from pilot customers that we've onboarded, right? What they were trying to do is to pull together an experience and check the boxes that they needed to get the rights that they needed, the content that they needed, and the platform to deliver it, to deliver the experience. And what happened was that they couldn't check all the boxes, but SyncFloor does. And so that's the amazing thing that we deliver for these customers. And it's why we're seeing strong signal and strong activity in the pilots that we've been doing. Our business model is simple. We take a commission from the license fees for live streaming and on-demand support, and we also charge a service charge. And so we have an effective take rate on the license fee of 18%, which is incredible for a marketplace business. Our competition falls way behind because we have a great end-to-end system on high-quality content with patented discovery, and we check all the boxes that they can't. So where are we today? We have 17,000 tracks and growing in our diverse, great index of independent music that goes from up-and-comers all the way through people who have 1 million+ monthly listeners. We have 80 catalog partners. That's a moat of content that's really hard to achieve. We combine that with our patented discovery system and our end-to-end delivery platform, and we have a bright future ahead of us at SyncFloor. Thank you. I'd now like to introduce my CEO and co-founder, Sejan McFarland.
Thank you so much. This is really interesting to hear about a marketplace that is really tapping into the creator economy, which I think is really abounding right now. I love the physics of marketplaces. And so I had a question a little bit about your focus on discovery. Tell me a little bit about what happens with repeat purchases and the buyer and supplier, sort of the demand and supply behaviors that are happening on sort of when they come back. How does that work, and how do you retain those ongoing transactions?
So where we're seeing some of the most interesting activity there is in our current pilot with fitness customers, actually. And so, first of all, as you say, the mechanics and the physics of marketplaces are really interesting. And so we've had the good fortune over the years of building up a strong content base, a strong partner ecosystem, and with our growing diverse index. And that really, the flywheel is spinning on the supply side. And that's the first thing you've got to get to. Once you've done that, you can then satisfy the diverse needs of clients. And fitness clients, when you think about fitness and wellness writ large, actually have a very diverse set of needs with respect to content. Once they've used our service and see that the content really inspires their instructors, then they start to put data, right, their folders, their playlists, all the things that are about producing their classes into our system. That makes it super sticky. And so that's where you get continuous repeat business. Right? The instructors, they build up folders of content based on our discovery system that they go, okay, now for every class I'm going to teach, I pull from here, here, and here, and here, and boom, I get another purchase. And then I get another purchase. And then when they do it live, they get live streaming activity that we also charge for. And so it's an incredible flywheel.
Excellent. Hello, I'm Karen Rutherford.
Hi.
I'm a very small shark.
Those are the dangerous ones.
Yeah. And I find this all very fascinating. It looks like you're really geared toward the fitness industry. Seems to be very lucrative in this model, the change, the fast pace, different types of music and whatnot, podcasts and whatnot. So my question is, I'm Karen, and I'm going to open up a little yoga studio, which would be impossible since I don't do yoga, But I now am going to do this, and I'm going to actually I'm going to carry on with my COVID world and do a little online too. So how do I find you? I'm sitting here in Wenatchee, Washington, but I've got a great base in North Central Washington. How do I find SyncFloor? How are you reaching out to all your potential customers?
Yeah, we've done a few things on that front, and we have more in the works, but Part of it is digital awareness and a digital marketing campaign so that people who are likely to use this, who might be in a fitness vertical or the other verticals that we're targeting, know about us. So we engaged a digital marketing firm earlier this year to get that word out into the universe about who we are. And that's been really effective for us in terms of name recognition. And then we are also planning to, with the funds that we raise, we are bringing in a director of sales and working on the sales motion. And then as part of our sales process, we're also looking at a referral program. There are lots of companies that work with fitness companies, and we've actually had one approach us and realize the power of what we're doing and how it would benefit their customers, and we're starting to talk to them about what a referral program would look like, or a reseller program with them.
Excellent.
And then we also want to work with platform providers who help small fitness instructors who are kind of doing a solo thing or a small business and creating services for them. We want to be one of those services that they provide through their platform.
So are there does that open some opportunities from a product perspective, a technical perspective, with some integrations and ways that people can enter your marketplace through some other point of entry?
Yeah, so that's become really interesting for us. So one thing that we're planning to do is to take the platform that we've built and create sort of a public API version for direct integration into applications and services. So that's one sort of prong of exactly what you're talking about. Another thing that we've already done, which is really interesting, is that all of our partners are able to build what we call sync stores on top of our platform. So integrated into their website, any one of these 80 partners can directly show off their catalog and have commerce happen directly on their catalog. And so in some sense, that allows us to be sort of their version of Shopify. Right? And what's really cool actually is we're about to have launched one of our partners actually doing advertising to their store, right, that we've integrated for them. And so in a way, we get to participate in those economics at zero customer acquisition cost. And that's really magical.
Excellent.
So as you think about the focus areas, that's one of the things with marketplaces that could be for everybody. It sounds like fitness has been a focus, and you obviously have different segments. How do you think about that matching so that you have, obviously with your really diverse catalog, that you're not just getting just 20% of that catalog utilized, but that it's really sort of spreading out? And how do you see sort of the health of the marketplace in terms of all of those transaction diversity metrics? How are you looking at that? How are you strategically growing it while also remaining focused?
That's right. So you use sort of the magic word, health. One of the things that we see ourselves being is sort of a steward of an ecosystem, of a really large family, right, and diverse family of providers, and those 80 catalog partners. And so what the types of things that make us really happy is when we see, for instance, with fitness activity, that when we run our reports and we say, how many of those partners are we paying out this month? Right? Because that tells you if that spread is good, it means you're touching everybody. We'd rather have 10 $1,000 syncs, let's say, in film or TV or advertising than one $10,000 sync, right? And so those are the things that we try to do to be a platform for all of our partners, and that makes them excited, right? And so we get the power of the aggregate, but serving the community.
Excellent. I would like you to expound upon a little bit more your backgrounds, because they're so, I think, integral in terms of attracting independent musicians. So tell us a little bit more about your own record label, how you all got together.
Yeah. Well, it's a fun story. Kurt and I met through Microsoft. I was outside counsel for Microsoft for a number of years and worked on technology transactions for them. And Kurt was at Microsoft for 20 years, starting as a young developer and working his way up to manage development of large systems, including multimedia systems and productivity software and a variety of things. And so we met working on one of Microsoft's big transactions. I had to write this complex agreement, and he had to implement what I wrote, so he was very concerned.
Interested.
Curious, let's say.
Curious.
And we just had a really good rapport in working together. So then when he left Microsoft about 7 years ago to start a music label, he asked me if I wanted to do the legal work on that journey. And I said, I don't know anything about music, but it's just copyright. How hard could that be? We've been dealing with all forms of IP and software.
Boy, did we learn a lot.
Innocent bliss, yeah. Little did we know. So we learned that together, and then that endeavor planted the seeds for this technology opportunity, and we thought that that would be a fun thing to work on together.
Excellent. What a great depth of knowledge.
So is that a single entity that evolved along the way, or is that a separate endeavor and then this started? Maybe you could talk a little bit about the evolution.
Sure, yeah. So Brick Lane Records is the name of the music label. It's an indie label in Seattle. And it's a separate entity, but it was sort of the inspiration because, Sage and I both love the independent artist community. I've been part of that community personally, played shows and toured and things like that. And really got into this because we wanted to help and serve that community. And what we were seeing is that there was a lack of access to opportunity. And we were trying to find ways to give them access to opportunity by creating community and using the sort of gravitational force of everyone coming together to attract more opportunity. And so we started doing that with Brick Lane Records, but found a way to do it at an even greater scale across a larger swath of the independent music sector with SyncFloor. And so we're really excited about being able to do that.
We made it.
I think we're out of time.
Did.
Oh.
Thank you very much. Welcome to Wenatchee.
Thank you. Thank you. Thank you so much for having us.
My name is Doug Wilson, and on behalf of Confluence Health, I want to thank all the sponsors, businesses, and volunteers who've come together today to support this event. At Confluence Health, our team of committed healthcare professionals serve 12 communities with a patient population spread out over a 12,000 square mile service area. Our team is consistently seeking new innovations in medicine and technology to create better patient outcomes. To advance even further, our world needs new innovators, like those you're seeing today at the Flywheel Conference. Companies who bring unique solutions and new technologies to our world. I'm excited to introduce today's final competitor, Iasis Molecular Sciences from Spokane, Washington. Iasis Molecular Sciences is an advanced materials company developing solutions to prevent the transmission of infectious pathogens from surfaces. Please give a warm welcome as Dr. David Vachon, CEO and co-founder of Iasis Molecular Sciences, comes to the stage.
Good afternoon. It's a pleasure to be with you today. I'd like to take this moment to thank the organizers and the sponsors for the opportunity to be here to tell our story. As you've heard, we are an advanced materials company, and what we've done is we've created a platform that allows us to generate families of self-disinfecting or self-sanitizing materials. They have broad application across medicine, industry, consumer goods, and the list goes on. It's my objective today to convince you of their value, not only economically, but also the value to society. So let's start first with something we all know well at this point. This story from the Times at the end of January is actually quite telling. This is what happens when two pandemics meet. Things are scary. This is a pandemic of drug-resistant infections. It's been amongst us for decades now. And it's not going away anytime soon. We overuse antibiotics, and they're going to stop working at some point. It's massive. And our tech actually can play a role. In medicine, we can actually build devices that will require fewer antibiotics. This is the size of the healthcare-associated infection, the drug-resistant infection problem in our country every year, recurring year in and year out, and it's getting worse. It's massive, and worldwide it's worse. There's 5 types of infections. They're listed here. 3 of them are medical device related. All of them are tubular in shape, and all of those tubes access the body, creating entryways for infectious diseases to get in to either the pulmonary system, the bloodstream, or the urinary tract. The other 2 are ecosystem related. In other words, a pathogen gets transferred to a patient. We can address both of these with our tech. And the concept is protect the patient at the core level of the medical device as well as the ecosystem of the patient to provide a complete system solution. To start, we're focused in the most prolific of all of these, the catheter-associated urinary tract infection space. It's a urology space. And so you might say, well, why urology? Who wouldn't want to solve this problem? Just look at the antibiotics that are prescribed every year. It's massive, and our tech works. The interesting thing is not much in the way of innovation has occurred here in more than 2 decades. Our technology works extremely well in the urinary tract. The devices here are the easiest to gain FDA approval for, and with success here, it's going to drive adoption across medicine, which is incredibly tube dependent. This is the opportunity in urology alone, across urinary catheters, ureteral stents, and urine drainage bags, and we have all 3 products on our map. So how does the tech work? It's actually really simple in retrospect. We start with a pharmaceutical-grade ion exchange resin, and then, because we can exchange ions onto it, we add antimicrobial ions. Silver is a choice for medicine. It's ubiquitous, it's safe, it's well accepted, and it works if you use it the right way. So we can drive this to completion, 100%. This is a powerfully antimicrobial resin. We then take it and we convert it from a bead form to a powder, and then we can take that powder and incorporate it into any variety of plastic, rubber materials, and that composite can then be transformed into tubing, sheeting, coatings, molded components, and you name it, we can do it. This is an example of a polyethylene tube that contains that silver derivative, and this tubing is used in the food processing industry. So this tube, actually, the idea is to prevent microorganisms from taking up residence inside that tube because that decreases yields and it taints the products. This is used in maple sugaring, and it was in the woods all last year. It performed flawlessly. So how does our tech address the HAI problem, healthcare-associated infection problem? This is a patient that you might see in an ICU that's on life-saving support for severe COVID-19. Every device that's saving this person's life is a tube. If we make tubes out of our material, we can save people. We can make a huge difference. Traction is amazingly good. We've been fortunate to have more than $6.5 million in grant funding. The DoD funded the urology program. They deemed the outcomes to be highly impactful. So we're going back to them for more money. We took what we learned in urology and we applied it to ecosystem coatings, not silver, but using copper. So just imagine flexible copper surfaces that you can have in your clinical environment. Commercial traction is amazing as well. Just by word of mouth, people are coming to us. They hear about us through the grapevine. They say, we want to use your tech. I say, give us an LOI. They say, you got it. We got them. We have a strong patent portfolio, and we also have a very strong trade secret portfolio. Can't talk about that. Our key customers are influential urologists. They're key. These key opinion leaders work in large institutions, and we want to bring them into the fold. We want to do studies with them. We want to teach them what we do. We want to publish with them. They're key to getting into those large institutions. The VA has too many people with SCI. It's unfortunate they can suffer up to 10 UTIs per year. That's a problem because urosepsis and death is a major complication. Anybody that has trauma will get a urinary catheter as well. And then in parallel, having a business development effort to bring more licensors into the fold would be great. So today's coated catheters are what we're competing against. If you take a small device and you put a coating on it, it's a small amount of material. It can't give enough to be antimicrobial for the 28 days this needs to work. Our material, we turn the entire device into a reservoir for antimicrobial agent. And so it keeps on giving and works for the full duration. The companies we compete with are large. The urology market, they all use coatings. These are the people that sell into those coatings for those companies. And so we're competing against both sets of companies. And I think we're bringing a much better product to the market. We have a hybrid model. It's built on sales and licensing. So direct sales of medical devices will certainly be best through a strategic relationship. We have one that started. We're not there yet, but it's working. And then licensing royalties sort of in parallel is going to complement top-line revenue, which looks strong. By this model, at year 7, we're over $100 million. In addition, you might notice that EBITDA differs significantly here. This model uses an external sales force. That sales force gets 20% of top-line sales, so it really hurts at year 7. But if you sell the company in the year 3, it's not much of an issue. Otherwise, you'd want to internalize that team. Executive team is small but mighty. We rely heavily on business advisors. We have expertise in urological devices, urological medicine. We have expertise in antimicrobial materials, regulatory affairs, C-level management, M&A, and entrepreneurship. So I think we have it covered. So our tech is going to bring the most significant change to urology in more than 20 years. And that's a big thing. Acquisition of the portfolio is very likely in year 3. There's nothing that can do what we can do. Other elements of the business are going to continue to throw cash. Licensing, I think we're going to have a real success with licensing because there is nothing that can match what we do. And beyond that, I think we're doing a really good thing because we're going to eat into a problem that's massive and not going away anytime soon. And so with that, I'd like to say thank you very much for the opportunity to be here. I'm happy to take questions. I have show and tell, and if anybody wants to see some of the things we've made, I'm happy to bring it on.
I'd love to hear a little bit more about the regulatory aspects of this. Can
Sure.
you talk about the sort of what path you're on in that regard and what dependencies you have there and where you're also free of dependencies?
Sure.
How do you see that affecting your company growth in the short and long term?
So, so regulatory affairs is always a bane for any investor that's thinking about it, right? It's a long, problematic path. In this case, the catheter, which is our first product, is a 510K approval.
Okay.
It's a non-significant risk device, and so we actually have mapped the regulatory path completely. And so that is a process that, following the complete development, which is about 18 months, it's about 5 months to approval. At that point, we have some options with that particular product. Mm-hmm. And remember, in parallel, what we have going on is a biz dev, effort to bring licensing into the fold. Right. And I think that's going to be successful. But a post-market clinical trial for this device makes a lot of sense. And the reason that's the case, and especially if we can get somebody else to pay for it, right? We're already in the market with a 510K device, which means ours is like theirs. You can't make any claims. But if we run a reasonably sized clinical trial and we show a difference, we have a distinct marketing advantage.
Is that in that clinical trial, let's talk about capital intensity there.
I'm talking about having the Army pay for it.
Okay.
And I think we can be successful there. In fact, I'm writing a proposal right now for a pilot trial. It's 46 individuals with spinal cord injury. It still needs to be reviewed, so we'll see. But I think they're going to like it. There's not a lot of companies that are working in this area. The competition's large, and nobody has a solution like we do.
This has been a year of wanting my whole house to be covered with your material. So I thank you for doing this.
Well, it works against coronavirus also, but it's the copper form. So those
different
surfaces
forms.
we make.
I'll take silver, copper, it doesn't matter.
Yeah.
So the interesting question is just a curiosity, because this is, when you think of the VA, as you said, the Department of Defense, you think of urology, this is a huge UTI. I mean catheters are infection magnets. So why do you think no other company has, what's your secret sauce? Why has no other company decided to do this technique, which...
Yeah. You sound like one of my employees. He looked at me one day and he said, "How come nobody thought of this before you?"
Yeah, exactly.
So, in my opinion, simplicity is elegant,
Excellent.
Right? If you can make something simple, nobody really thought. What people use today are minerals that they can mine and they can add silver to. They can't add copper. I mean, we have about 9 different derivatives, and we can put them in urethane, silicones, PVC, the list goes on. I mean, so we can probably make 200 different families of materials.
So how defensive is the technology that you've created? Because you showed in sort of a very simplistic perspective how you take resin and you're attaching things to it. Tell us a little bit about that strategy for defensibility in the long run.
Sure. So I think freedom to operate is really good. And because we have PCTs that are under examination presently, and they have not cited any art that is of any pertinence to us. In fact, we got our first patent awarded in Australia recently. So we're doing quite good. No, I don't think people thought that that taking these resins and then changing their shape from these big, relatively large beads, right, and then crushing them down to fine dust, that was going to be easy. But we figured it out, and that's one of our trade secrets. And so it works really well. We make, I mean, that tube that you got to see, it's a little odd in color, but it has a UV protecting agent in it. So the gold color of our tubing with the blue color of the UV protectant made it its sort of snaky green. But so you know, honestly, I think that nobody thought that they could make those resins small enough to make cosmetically attractive, you know, things from them, and we just proved them wrong.
And you've done the trials to ensure that it lasts longer than your competitors too.
Oh yeah, we've had third-party trialing done as well, and you know, so obviously urology is very important, silver is very important. It's incredibly effective across any of the escape pathogens. I encourage you all to maybe look that up. It's ESKAPE. It'll give you some insight into drug resistance. We're effective against all of them. And then outside of devices, of course that applies broadly across tubular devices. In the copper derivative, as an example, we've made paints that can reduce escape pathogens by 7 logs. So that's 99.5% in 30 minutes. So
that sounds good. I don't know exactly
it's good.
What that means.
I mean, it's good. It's,
you had me
suffice it to say there's nothing living on that surface.
And so let's talk about the team and the formation. You guys are very science heavy. And you have sounds like a great advisory team. There's a business development strategy. How do you think about company growth in terms of the kind of company you want to be? What kind of excellence is it going to take beyond science? And how do you see that team growing in the next, like, let's say 18 months?
I think it's a great question. Yeah. So my background, I'm obviously a scientist by training. I have a PhD in chemistry and postdoctoral experience and all of those things that you need to really do hardcore science. Which takes a long time to learn. That's why you have gray hair by the time you're doing these kinds of things. But honestly, and I have an MBA also in finance and marketing, but I'm not the person to lead this team to be $100 million in revenue. I mean, I already know that. And it's just going to be it has to be the right person, right? And I'll know the right person. I mean, the one thing that the MBA brings me is to know when somebody's given me a line, right? And I can do the math if I need to, but it's not my expertise. And this company has tremendous potential. So.
Right. So from an investor's perspective, how do you see not only identifying that person, but bringing them in and making sure that there's continuity and transition and ultimately success? Like, what are some of the things that you've thought about in regard to that?
So I mean, clearly, I need to play a big role in this, right? So I'm going to be an advisor to the CEO, the COO. I'm going to play probably a role as a CSO. I'm going to work in biz dev. So I'm going to be tasked out across the company as we grow and have input on who needs to be where, what kind of people we need. And that's all going to be committee discussion, decisions that are made, you know, in unison with everybody agreeing what makes sense for the company. I think I'm going to be good at that.
Excellent. Well, we want to thank you for applying to Flywheel and coming to Wenatchee. Appreciate learning more about your company.
It's my pleasure. Thank you very much. It's a pleasure to see you all.
Wow, what an event. Join me in recognizing the incredible top 6 companies who competed: PetHub, Fuchsia, Motis, Cognition Med, SyncFloor, and Iasis Molecular Sciences. Thank you, founders, for sharing your company story and your vision with us. I want to thank all of our speakers and panelists for engaging in such thoughtful discussion, and a special thank you to Dave Parker and Max Martina for serving as our moderators. We are grateful for presenting sponsors Moss Adams, Ogden Murphy Wallace, Confluence Health, and Microsoft, along with so many others who supported today's event. Remember, you have until 4 p.m. to vote for your favorite company to win a $5,000 cash prize. So go to flywheelconference.com and vote. You'll want to tune back in to our social media channels under NCW Tech Alliance later on today to find out who was the audience favorite, who won the $50,000 relocation, and who will be crowned this year's Flywheel Investment Conference winner. Up to $200,000 is on the table, and we can't wait to see who will win it. In the meantime, I encourage you to support all of the founders who competed today. Share about today's event in your network and interact with us using hashtag Flywheel Conference on social media. On behalf of our entire team, thank you. We're so grateful you joined us today for the 2021 Flywheel Investment Conference. We look forward to seeing you again next year.